a little bit more brief than usual, but it's all about quality, not quantity. So I've seen on social media a lot of people complaining about the price action over the last few days, and it totally makes sense. I get it. The market's been quiet. But you know what? We've got Jackson Hole coming up, first Jackson Hole with a new Fed chair in a long time. So that I think is what the market is really looking for, to get some hints and ideas about what's going on with the broader market, broader fundamentals, and that in turn is going to ignite some more volatile price action in the markets as well. So welcome. My name is Imri. I'm a professional trader, been on the institutional side of the industry for coming up, I want to say it's just over 11 years now, and I've just recently made the switch back to trading my own capital, stepping away from the institutional side of the world. Call it a semi-retirement. We'll see how long it lasts. And today we're going to be diving deep into the intersection where I think retail traders truly have an edge, which is fundamentals meets technicals. Right now, we have got the Market Edge AI Ask Market terminal up right now, and we're going to use one of my favorite prompts, which is very straightforward. What is the morning brief? This is how I start my day every single day, and I can't tell you enough how important it is to have a consistent process that you're able to follow day in, day out. Everyone wants to be consistently profitable. I'm telling you right now, consistency with your results is going to be informed directly by the consistency or lack thereof of your preparation. Now, the markets that I typically look at are equity index futures, gold, oil, bonds, and the dollar. So as I'm running this morning brief, what we can see is that overnight we had a little bit of a sell-off, and then now we're consolidating and basing a little bit here in ES. NQ is going to be fairly similar. We can see here that overnight there's some news coming out of Russia, Ukraine, but nothing too, I would say, incredibly game-changing here for the market. Now, in terms of the sentiment, it's leaning bullish ranging, which is 100% in line with what I'm seeing with my own eyes as well. Okay, with gold has had a nice little correction here after being on a heater, and we're now recovering slightly. We're leaning bullish, bit of a reversal risk, and what we can see here is that overnight dollar weekends, bond yields have eased up a little bit, giving gold a tiny bit of a modest lift here. And NASDAQ, as I mentioned, looking very similar to the price action in NQ. And really, when I'm taking a look at headlines, I'm not seeing anything coming in that's extremely critical, extremely breaking in terms of what we could be looking for to immediately ignite some trade ideas or flip a bias anywhere in the market. Now, once I take a look at what's been happening overnight, I want to start going over to the economic calendar to see what opportunities exist today. Now, a lot of traders make the mistake of running away from high impact news events. And here's the thing, whether you're trading personal capital, whether you're trading with a prop firm, and some of those prop firms have rules around trading news events, here's the thing. It doesn't really matter. It shouldn't impact how you approach news events. The best way to approach news events is to look at the market calendar and understand that there's going to be a min and a max range for each event. So for instance, if we go today, the economic calendar is very light. 10:30 a.m. Eastern, we're going to get the EIA weekly crude exports, which if you're an oil trader, you must know about this. This is the reliable weekly news event, that you can use to get some little bit of energy, in no pun intended, in crude oil trading once the New York cash session is opened up. But if we go to tomorrow's jobless claims, for instance, we can see that we have a min and a max range for this jobless claims news event. So we can see that if we get a reading around 210, we can expect ranging price action in the dollar. But if we get above reading 213 to 216 gives us our bearish to very bearish reading, and then below would be 198 to 204. That would give us bullish to very bullish price action in the dollar. Now, so that's the best way to use an economic calendar, is to avoid the market if we get something that comes in as expected, as forecast. But if we have a miss either above or below, that's where news trading gets extremely exciting. But you don't want to trade the event like the second the news release comes out. You want to give the market time to settle down, let that initial burst of energy settle, and then you can start looking to trade in line with the fundamental bias. And as I mentioned, today we don't have a lot going on in that economic calendar. We're going to go back to Ask Market here. I'm going to start a new chat, and I'm going to show off another of my favorite prompts here, which is the game plan. Just a very simple prompt that's going to give you a game plan for the key markets that you're tracking based on sentiment, key levels, entries, and what to watch on each. Okay, so here we can see for ES, dips towards 76.50, which would be a pullback area. Now I think that would be a decent move down. Or trading at 77.17 today. That might be asking for a lot from the market on an intraday basis, especially right off the cash session open. We'll take a look at some price charts to see. But that being said, I do love 76.50 as a pullback region if we can get down there. Now, ranging structure favors buy the dip into support. That's what the market AI is telling us, and I believe that's exactly right. As far as resistance, the first gap would be 77.35 to 77.42. That aligns with a lot of what I'm seeing on the chart right here, and we can see that lines up with this mini consolidation before we started breaking down. All right, so that would be the game plan on ES. On gold, it's pretty straightforward as well. We can see that pullbacks to 43.80 for longs, targeting 44.80 could make a lot of sense. So pullbacks back into the support area, looking for moves up. What we want to watch for there would be, real yields. We want to watch bonds, and we want to watch the news feed as well to see if there's anything coming out of the Middle East. NASDAQ is going to be very, very similar to ES. Again, looking for pullbacks here, 29,300 for long, targeting 29,850. That would be a beautiful setup if it happens. Now, I want to take what we have from this game plan, take what we have from the news event, and we can start taking a look a little bit more closely at some technical charts, give you a breakdown in terms of how I like to look at the market, and then we're going to be able to hopefully answer some questions. I'm going to say today, right off the rip, as someone that loves to trade equity index futures, loves to trade stocks, today is not necessarily a day that I'm super excited about when it comes to trading, and I'll be sure to explain to you exactly why that is. But first, let's take a look at yields. Now, there's a few yields to be keeping an eye on, and yields have been easing off overnight. Okay, so what we can see here with yields overnight, they are down a little bit, and I think so long as yields are moderating today, we could see an environment where equity index futures trade a little bit more constructively, get a little bit more of a relief rally as well. So that would be fantastic, something for us to definitely be keeping an eye on. Okay, so 30-year yield moderating, 10-year yield moderating, short-term yield also moderating. So that gives us the opportunity for what could be setting the stage for a bit of a relief rally here in ES and NQ today. Now, if we go over to ES, now this is a very typical pattern in the market, right? So we had a period of consolidation here. Market breaks out, another period of consolidation, and what we're eventually looking for is another breakout. Now we're getting to the point here where I believe that the market is getting ready to start to defend what buyers will see as a relative discount. Okay, we still need to have some evidence that is going to be the case, but we're going to apply one of my favorite technical analysis tools here in a moment, which is a fixed range volume profile. So I'm just going to profile the market from the swing low on July 29th all the way to current prices. And what we can see here is a record of where business was able to be done. The best way to understand a volume profile is that the area between the value area high and the value area low is collectively understood as fair value. All right, that is where 70% of all trade and all business has been done. Now, all a volume profile shows us is where the market was able to facilitate trade and where it hasn't been able to facilitate trade. Okay, those are very, very important things to understand. So what we have here are minor nodes, as they're called, in the volume profile. So we have little protrusions And then we have thinner areas such as here, which is where business was not done. Now, this is where so many different technical styles of analysis can all come together. Here, for instance, for you ICT SMC people, there's a fair value gap. I think that's what you would call it. I believe that's correct. Notice how that lines up, with this low volume corridor in the volume profile. So there's many ways of understanding the market. I love profiles because it's like taking an X-ray machine to candlesticks. You start seeing what's behind a candlestick that you can't see just by looking at price action alone. Now, the idea with a volume profile is that as we dip into a low volume area in an uptrend, we want to see buyers start to defend, and that is kind of what we're seeing right now. Now we're going to take a little bit more of a granular look here, and here's the really cool thing. We can also apply volume profiles to actual sessions. So here I'm going to pull up a volume profile for the cash sessions only, and we can see that yesterday's cash session has a value area stretching right here, and that for me lines up really nicely with what market AI is also identifying as potential resistance. So I want to see how we start dealing with the market as we come up to 77.28, and then we have this structural resistance up above at 77.35. But I primarily want to see if we can start building value up here. Range-bound price action is the market accepting fair value in an area where previously we haven't been able to do so, at least relative to the last several hours of trade. That would be very, very interesting. Otherwise, the pullback play is going to be high probability as well. Okay, now just coming back here to the calendar for a second. When I see what's going on today, there's just, nothing that's particularly exciting to me. We're going to get minutes from the meeting of July 28th to July 29th. Saw someone say FOMC today, 2 p.m. Eastern. Yeah, but it's not an interest rate decision. It issues minutes from its meeting of July 28th to July 29th. I think that given Warsh's attitude towards the Fed, which is basically running it by providing the market with as little information as possible, I'm not expecting too much of a game-changing piece of news from that news event. It's not something I'll be looking to trade personally. All right, just putting that out there. Saw that comment in the chat. Very, very good point, though. Okay, and we can see right now that yeah, this is interesting. We're getting catching a bit of a bid here in stocks. Okay, taking a look at gold here as well. We can see there's a bit of a pump here as well in gold. That's a big enough pump that I'm going to be taking a look to see whether or not we have some news coming out here. So there's got to be some news that's just come out. Let's take a look. 837. Now, not really seeing 835 5 minutes ago. U.S. Treasury increasing size of liquidity to support buyback operations. Current maximum size would be at least 4 billion. Okay, all right. So that does make a little bit of sense. So here's an interesting thing, right? When you see something that you don't understand from a fundamental perspective, you can click on the sparkly AI icon, and what this is going to essentially do is it breaks down the fundamental analysis behind the news. What we're seeing here effectively is that the U.S. Treasury is increasing size of liquidity to support buyback operations. What that means is that they're trying to lift bonds, right? That's effectively my take on it. So they're going to try and ease pressure on things where markets are rate sensitive as yields are going up. That's obviously been in the news for some time now. But here's the thing, stocks and yields can go up at the same time. There are environments in the past where stocks have gone up and bonds have gone down at the same time. Now, usually those periods do not end well, and then there is typically a significant market correction at the end of it. But this is effectively the White House saying, all right, we see what's going on with yields, and we understand that the market's concerned. We're going to do a little bit for what we can in order to help the market out here a little bit. Whether this is significant enough to result in a huge repricing, I don't know. I think we'll have to wait and see. There's also in the AI icon that Teach Me icon, which is going to go down into a little bit more detail on things like treasury auctions, debt management, et cetera, et cetera. Suffice to say, this is a very, very significant movement that we're seeing now. We're coming into where that structural resistance is. This changes things for me a little bit as we're heading into that morning session. I really want to see now if these moves can hold. That's really what's going to determine the quality of today's session, in my opinion. If we look at yields, we can see that yields are dropping sharply on this news as expected. So that means bond yields are going up. Bond yields are going down. The value of bonds is going up. So for me now, the game plan for trading risk on assets is going to be very, very straightforward for today. I want to see this movement hold. You know, we're going to get a pullback. We're always going to get a pullback, but I don't favor fading this strong of a move right now. What I want to see is, are we going to be able to accept fair value up here? If we accept fair value, I'm going to look for a sweep of lows of a range followed by a move up. If you're worried right now that you've missed a move, you haven't missed it. This is really just setting the stage for the day. Nothing has happened yet. Okay, this is just really us setting the table for the day to see whether a move of this magnitude can actually hold or not. It's going to be the same thing, ES, NQ, gold, exact same playbook, I think, for all these assets that are pumping right now. I want us, once this move settles down, I want us to see us build value, or we get a pullback into a low volume area of this rally, and then we're going to see what is what. Now, if I profile this rally right now, you're just going to see low volume here. We need to wait for a consolidation to start taking shape on, if you're looking at a time frame based chart, like a 1 minute chart, 2 minute chart, 5 minute chart. If you're looking at a heat map, you're going to want to see those volume bubbles start to trade sideways, right? So we need a bit of a high volume node to start building at the highs here. What does that mean? It just means two-way trade is taking place. If we just start seeing a liquidation of this entire move, that could indeed set us up for an interesting day lower. You know, but the White House is clearly trying to signal support for risk on assets here. We know how much the White House loves risk on assets, and they will step in to intervene, whether overtly or just by talking the market up. This is fairly overt, however. So I think really the game plan for today is very straightforward. I'm just going to pull up a weekly volume profile here as well. So you can see here in this current week's developing weekly volume profile, we're currently in a low volume corridor, right? Low volume corridors are fascinating because what would happen is that if sellers are really in control here, then we're going to see them start to defend this low volume node as they would consider the market now at a premium, and they believe that there's further discount yet to be priced in. However, if we don't see an aggressive liquidation here and we see the market hold in this low volume node, you know, then my target in ES is going to be 77.70. I think we can definitely get a very sharp move up in that case. In NQ, it's going to be a very similar story where we want to see whether or not we're going to get a liquidation as we trade into the lower volume part of the profile. NQ is a little bit different. You know, I don't think that the lower volume corridor comes in for quite a few more points here, like another 100 points higher approximately, right? So for me, I think ES is the more obvious trade. Obviously, the two markets are going to be correlated, but I'm just saying that that's interesting that NQ and ES are still, I'd say NQ is lagging ES a little bit as far as where we are relative to the profile. So if we're looking for build up to occur, again, what I love to see is a sweep of the low of that range, trapping or tricking sellers into trying to break down. Reclaiming that range is my setup, and then I'm looking for longs. Initial targets would, for me at least, would be the area around 29,880, and then up above here around 30,100. That's going to be my focus for sure as we head into this cash session. And then taking a look at gold, I'm not as excited to buy gold now that I'm zooming out here a little bit, at least not in the immediate term. Why? Because we have these prior highs coming in right over here. Okay, so I don't want to be buying into resistance. You never want to be the guy buying the high in the market. Okay, so I would much rather see gold break out, retest, and then go again. So from a day trader's perspective, I'd be more focused on equity index futures today. from a macro perspective, this is as solid a setup in an asset like gold as I'd like to see. This is textbook bracketing. You can see we have a very clearly defined range. Now my view on gold here is that we have put in a significant bottom back in July, right? So that's my personal view. We've put in a significant bottom back in July. So I don't want to personally short a market that's in an uptrend. I'm more of a swing trader. Even when I'm day trading, I like to day trade in line with the larger underlying trend. So for me, definitely looking to see if gold can break out, build value above the breakout level. That's going to set up a phenomenal trade in gold. So that's a good question, Sleeping Dolphin. How do you know it's a high? You don't know it's a high. You never know whether it's actually the high or not. What you do know is that previously speaking, and this is why breakout trading is exciting and very painful. What we do know previously is that buyers have failed up here 1, 2, 3, 4 times, 5 times previously on this hourly chart. So this has been resistance, right? I'm not going to get into fancy order flow and auction market theory terms. Just say there's been a lot of supply of gold up here. This is an area where sellers have considered the market at a premium. Now, as we trade into here, what we want to really see, and this is my saying, I want the market to commit to me before I commit to the market. What is different about this time around? Well, we do have some fundamental news that's driving some urgency here, but there's also likely going to be some profit taking here. So what you don't want to do is buy here on anticipation of a breakout. I would much rather wait for the breakout to be confirmed. How do I see or consider a breakout to be confirmed? It's not a candle closure above the range. It's not. What it is for me is the market able to build value, able to build a range above the previous range. Why? Because this is the market saying that buyers and sellers are considering this area now to be fair value, whereas previously they considered this area to be fair value. So fair value is literally migrating higher. Okay, and this is the perfect intersection of fundamentals and technicals. This kind of news here is important enough that it is causing significant volume to come through the market and reprice risk assets higher. That's exactly what you want to see. So what was a boring news day, thanks to an unexpected headline, is now looking very, very interesting. Now, again, I do not want to buy highs. I don't want to chase the market. I don't need to think for a second that, oh, okay, we went up straight in ES for 33 points. That's a big move. We went up in NQ, 165 points. That's a big move. Have I missed anything? No. This is the initial surge. I want to see pullbacks into low volume nodes, or I want to see value building. That's what's actually going to set up the trade. Okay, so I think this leg is getting mature. I don't think we're going to run up another 500 points without a breather. So be patient, wait for your opportunities, wait for those types of setups that fit into your playbook. Okay, what gives me the conviction or the confidence to start looking for those types of plays is the fact that what we have here is fundamental news that's caused the market to reprice these risk assets. So now I need to see the technical setup confirm the fundamental news. That's where the opportunity is going to lie. Yeah, so we can see gold starting to pull back a little bit. Oh, for you Forex guys, obviously this is going to be rough for the dollar. Expecting still further downside in the dollar. This has been a call that I've been making for quite some time. Dollar up, then dollar down. My target in the index at least would be around 98. Okay, so now what's interesting is that in theory, this should also be good for assets like crypto. So Bitcoin, we can see here also participating in this rally, but a lot more muted relative to what's happening in stocks, I believe. Bitcoin, for me, the absolute key level line in the sand for buyers is right around 62,000, right? 62,260. If we lose that, I think crypto is going to start its next significant leg lower. My short-term upside target in Bitcoin would be just these highs right here, around $67,000, 66,675. Okay, if we can break above that, I think we have a decent runway to about $72,500 or so. If you see the high on the higher time frame, do you look for possible entries on the lower time frame? Yeah, of course. Of course. So all time frames are, right? It's just different lenses through which you can view the market. The reason I love swing trading is because it allows me to stack more time frames together. If I'm so focused on scalping, I have very little room to play with the market as far as time frames go. Okay. Yes, I can have a higher time frame target. That's fine. But what I love to see is a higher time frame move and then use a lower time frame intraday, so on a day trading basis, to find ways to get in on that move over and over and over again. Let's just see. Okay, so let's see if we're getting a bit of a pause here. Nope, not yet. Still pumping straight up in ES and NQ. That's fine. This market is eventually going to run out of buyers, right? So buyers will eventually exhaust themselves. Sellers will eventually step in, passive liquidity coming in on the offer. Buyers will be unable to lift the offer any further. Then we're going to get a rotation. Very few guarantees I like to make about the market, but that is one of them. Nothing goes straight up indefinitely. We're going to see an exhaustion of buyers. We're going to see a rotation. For me, that rotation is going to be the opportunity. And just on a practical trading note, okay, this is where it's so important to come into each session with a clearly defined plan. So what does that mean, for instance? For me, what that means is I do not want to be shorting this market today. I already know that. So I've already eliminated 50% of my cognitive decision fatigue. I know that I'm not shorting ES or NQ today. I don't care. I don't care if we give back half this move. I'm not going to think, oh, I missed half that move. What I'm thinking is I have every fundamental reason to be bullish here, at least for today, at least in the short term. We pair that with the bigger picture technical analysis that we just did, looking at the market entering into that low volume corridor on the daily time frame. Pair all of that together, I only want to be a buyer. So now my job is super easy. I only need to look for reasons to buy the market. That's it. I've got my targets outlined. I have my bias in mind. It's just now a matter of looking for plays that fit that bias, fit my technical playbooks. Very straightforward, very simple. Crude, not moving too much here, but this news is not necessarily like specific to crude. But if we look and zoom out a little bit, what we can see here is that this is the range. Okay, this is the range where we've been playing it. If I profile that range, so if I go from the swing high all the way to current prices, what we can see is in this area here between, say, 85.55, 84.40 or so, that is the resistance level that we need to take out in order to look for higher. So long as we're below here, I can favor rotation back towards lower volume areas in the profile. So for me, I'd be below this area right here, or targeting 82 roughly. I don't think crude is the most exciting trade of all time right now. I think that so long as we're between these zones, we're going to get pretty choppy action, but not bad if you want to day trade range bound price action. And with today's crude inventory reports coming in, you're probably going to get some decent volatility to be able to play that range. All right, we've got a few minutes still remaining. If you guys have any questions about anything to do with trading, anything to do with fundamentals, technicals, let me know. We'll use the remaining time for some Q&A here. 4 billion per operation. It's pretty hefty, to be honest. That's decent support here for the market. Should be very good for risk assets, as we can see here. Are there prop firms that you buy leverage? I'm not sure what you mean. I'm not sure what you mean by buy leverage. I feel like how most prop firms will operate is that based on the account size, you pick, the more access to contracts you would have, which makes sense. Leverage is typically gonna be based on the account size. More leverage does not necessarily equal more opportunity. Leverage cuts both ways. It magnifies gains, magnifies losses. I don't see leverage as a good or a bad thing. It's just something that you need to understand as a tool. It's a very powerful tool, but like any power tool, a chainsaw can really mess you up if you don't know how to use it and you don't respect it. Very impressive rallies here. Very, very impressive rallies. Now, you have to think though, this is just a note on game theory and trading psychology. Cash open is going to be in a little over a half hour. Everyone's going to see this and think, "Oh, we're just going to pump higher and higher and higher." I think that this kind of rally is a fantastic opportunity for people buying tops to get trapped and caught. Right? So if we're still trading near the highs of this rally as we head into the cash market open in a half hour or so, uh, I do not want to be buying that. To me, that smells like a complete trap, right? That I think the market's going to want to flush a little bit, shake out some weak hands in order to be able to trade higher. So be very patient with any longs on equity index futures. Okay, so say if I only have 1K, can I risk that 1K but borrow 10K? With a prop firm, if we're talking simulated prop firms, I think the risk parameters are already baked in. So it's whatever they tell you is what goes. I don't think there's much room for negotiation. And same with brokers. You know, they'll a real money broker is also going to have margin requirements and so on. So yes, the whole purpose or whole point of retail trading is to is to trade based on leverage. You know, that's a fact, but how much leverage you get is going to be up to the FCM, futures commissions merchant. So while, I personally am a cash session, New York cash session trader, like stock market cash session trader. So I like to start trading at 9:30 a.m. Eastern. But to me, what I'm seeing here is a beautiful setup for the day. Beautiful. I've got a lot of things pointing towards a very specific directional bias. That doesn't mean I'm definitely getting into longs today. I still need to see a technical setup that aligns with what I'm looking for, right? So I gave you guys a couple. We're going to wrap up on that. I want to see balance building at the highs, so range bound action. I want to see low of that balance getting swept, and then a reclaim of that level. That's one of my favorite setups. The other thing that I want to see would be balance building, a breakdown, balance building, breakdown, and then reclaiming a previous micro range for pullbacks. That would be another setup. So I've got breakout setups, which looks like this. We sweep the lows, we come back in, and then I've got a pullback setup, which is where it looks like we're building value, breaking lower, and then we break back above previous consolidation. Now, understand the logic behind this setup. If we have something like this and people are short the market here, where are they going to be put under pressure? Mostly people will have their stops above previous highs, right? So it's not that the stop run is what leads to the breakout. It's the sign that buyers are taking control back from sellers. I want to see, and this is a little bit getting into the weeds here on an order flow perspective, I want to see volume declining on those pullbacks. I want to see very low volume. I don't want to see huge volume on the pullbacks themselves. I want to see declining volume, and then I want to see a surge of buying volume with trend. Pullback would be preferential to me. That'd be the preferred setup. Why? Because I'd be able to buy the market at a relative discount. Whereas if we just get tight consolidations, that means is that the market really is bullish, but we're not going to get as much of a relative discount compared to the rally. All right, guys. Hope you enjoyed this session. I think this is now going to be, I started the stream saying, I'm not too excited about today. Now this news changes everything. I think we potentially have a fantastic trading day on our hands. Okay, so that's my game plan for ESNQ. Gold on a swing trade basis. That's what I want to see. I am not buying these highs. This is a trap for sure. I'm not buying these highs. It's not financial advice, obviously. Do what you will. But for my playbook, I'm not buying these highs. I really want to see value build above that resistance zone, okay, where we previously had oversupply of gold. Okay. Thanks, everyone. Stay safe out there. Good trading. Catch you guys next time.
In now. Okay, amazing. All right, 6-6. Can everyone hear me now? Am I fine? Am I? All is good. All right. Yeah, I got a new mic, so the input was a bit, I had to mess around with it. But let me know if you guys could hear me all clearly. Usually I have some filters on, but this is pretty much just the raw mic. So yeah, how is everyone doing today? Hope everyone is doing well. Is my screen okay? Can everyone see my screen? Let me know if you can see my screen, and then we let's get started with current market price action. All right, everything should be working. Cool. Gonna give it a couple of minutes for more people to join. Let's chat everything out. All right, let's see what we have so far today. Start sharing. And then we'll start breaking down in 1 minute. Start on TradingView. Good size mic. Some mics are bigger than the streamer's head. Dude, my head is quite big, so I don't think no matter what mic I get is going to be smaller regardless. But yeah, this is the, I don't know how to pronounce it. The Shure SM7DB. If it sounds good, maybe you guys could buy it as well. But yeah, I used to have a Blue Yeti and it was a bit, lasted me like a decade, but that one had to get upgraded. All right, let me start posting this on Instagram. What is my plan? Okay, cool. Yeah, let's start breaking down my plan and what I am currently seeing for the markets today, right? So if you look at, let's start on the daily, specifically focusing on NQ, right? If you guys want me to break down other assets, then just let me know. But NQ is my bread and butter for scalping models. So yeah, let's begin. I just add more conductors to my tech when need an upgrade. Is my screen lagging? I feel like my screen's lagging. Hold on. All right, should be somewhat better. Okay, so here's what I am currently viewing within the market. Obviously, if you have watched last week's stream when I was on Wednesday, we have this balance range over here. And then you have large aggressive sellers that broke below that balance range. And the question became whether we could find acceptance below the range low or not. Of course, we couldn't find acceptance as indicated here from the last rejection away from it. This large rejection away meant that aggressive buyers were able to take back control. And as a result, we come back into this initial balance range. Basic supply and demand, basic balance and imbalance states of delivery. As we come into this initial balance range again, the market starts to give you further two-sided price action. It's to be expected, right? Anytime you come into balance ranges, you're going to get two-sided price action. There's no doubt about it. Volume point of control, balance ranges, two-sided price action. The market is satisfied. The market is offering fair value. So this is the current range we are dealing with. Right, let's ignore the previous price for now. This is the current range we are dealing with in the sense that here you had consolidation. Large aggressive buyers come up, but they fail to initiate higher. They fail to find acceptance at higher prices. As a result, responsive sellers step in, and this is where they are dragging price back down lower into this initial balance range. So for now, we are still in balanced territory, right? This regime is still pretty balanced. It's pretty consolidated. You want to fade the highs and you want to fade the lows. That is how you would play these balance ranges. Anything until we've broken above and the market, attempts a retrace with sellers stepping in, but they don't get rewarded, then that is where you're going to get that transition from a balanced state of delivery to an imbalanced state of delivery, and that becomes obviously much more higher probability. But for now, you would expect two-sided price action on the higher time frame. This doesn't mean there's no trades, by the way. This doesn't mean there's no trades. This just means you're switching your gameplay, you're switching your playbook from expansion plays to rotational plays, right? So that is what I'm currently seeing on the daily time frame. Of course, after we've had this price action, when you're looking at, it's the same thing fractally. You have this now, you have this consolidated range on the hourly. You break above, large aggressive buyers break above the range high. You're looking to see if we could find acceptance here. And then you could look to target, the highs. Oh, I need more water. Take trades from low to high. Yeah, like anytime you're in a range, you want to fade the highs and fade the lows. It's rotational. A range is created when the market is fair. When the market is in fair value, the highs and the lows will be protected by passive participants and also responsive participants. So when you come down to this range low, passive buyers are going to absorb aggressive selling demand if the selling demand is unable to overwhelm the passive buying supply. So that's one thing. And then also you have responsive buying stepping in as well. Because at the range low, responsive buyers will deem this level to be too cheap, and then they'll push price back inside the range. So you want to fade the lows and fade the highs. If you get acceptance away from, so if you get acceptance above the range high or below the range low, then that is where you're looking to transition to an imbalanced state of delivery. And that's where you get your large expansion plays, because then you get, one-sided price action. But if you look at the hourly right now, focusing on pre-session, electronic trading hours, and I believe this is also part of yesterday's New York PM session, we have pretty much, a consolidated range. We've broken above the range high now, which indicates aggressive buyers are in control. If they fail to find acceptance, then we come back into this range, and then we probably just consolidate for the rest of the session. So I really want to see the market find acceptance above here in the form of selling absorption and also sellers failing to take back control. When you're looking at when I switch to order flow, ideally cumulative volume delta should be increasing because that represents aggressive buyers are in control. Some ranges are hard to trade though, really sloppy. I need a quality range. Yeah, that is true. I mean, it's easier said than done, right? When you're in trading, I say this to everyone, right? All the patterns you trade, even if you do trade patterns or not, is going to be snowflakes. Snowflakes don't have the same patterns every single time. And that's like trading. You're not going to get the same ranges every single time. You just have to adapt. And that, you get better with it with market experience and intuition. So yeah, this is my current narrative for the day. Hopefully we continue higher. Hello, Bao. Hello, Bao. How are you? I don't know if I pronounced that right. But you? W1. Hello. I am good, thank you. What about yourself? Welcome, Usman. Hope everyone is fine and doing well. Indeed, we are. We had this large expansion pre-session, so hopefully it provides us with some nice price action. How have you guys traded this week so far? Since the last time I came onto stream. How have you guys done? Curious to see. Because we did, in terms of opportunities, there were quite a few. Especially Thursday. Friday, there was a few rotational plays. Monday was a bit and then Tuesday yesterday was a bit dead, to be honest. But I'm sure there was still some good trades that you guys caught though. I think Tuesday for me yesterday was a pretty slow day because we had a large expansion pre-session. Good hit 22 RR today. Jeez. Spare us some change, James. Spare us some change, mate. Marco is long. I think liquidity sweep. Yeah, I mean, I would be leaning towards longs as well. Even though on a higher time frame, we're in a balanced range at the moment. We're coming back into this consolidated price action where you would expect for two-sided delivery. If you go onto the lower time frames, like if you refine it, longs are looking like they're going to hold today. Long, sure.
Mr. Hugh, what's going
Hello.
on, brother?
How are you? I'm doing good, thank you. What about yourself?
I'm all good. I'm all
Could
good.
you-
Thank you, man.
Could you hear me? Is there an echo or not? I don't know if my mic picks it up. It shouldn't pick it up.
Nah, you're good. You're good. Your
Okay,
mic is
just-
crispy, man.
Amazing. You just let me know if there is an echo. I'll put on some headphones.
I caught the start of the stream where you said you picked up a new one.
Yeah.
Ironically,
Wait, which one is that?
this is the. I think sure it's a similar one that you got. It's the Shure. It's the
MV7.
MV7 Plus.
Oh, right. Yeah, I was looking at that one as well. I was comparing the MV7 with the SM7 DB or SM7B. And then, you know, I just got two. I was comparing 4 mics at once and then I just got overwhelmed. So I just bought like the most, like the best one, hopefully.
Yeah. I don't know too much about these things, but I'm trying to upgrade my setup slowly, and I read this one was pretty decent, so I picked it up.
Amazing. Is it attached now? Is it attached to?
No, it's not. It's not. I'm waiting for. I've got an arm coming as well. I
Oh.
think that's arriving today. So maybe by tomorrow I'll have it set up and ready to go.
Nice. What mic did you have before?
I'm on it at the moment. I've got the HyperX Quadcast. I don't know if you've heard of it or familiar with it.
It's the red one, isn't it?
Yes.
Reddish
that's the
one. Yeah.
Yeah. That's the one. That's the one.
It does sound nice though. It's really clear.
Yeah.
Yeah.
That's always good to hear,
It's
man.
not bad.
It's a good little travel mic because it comes with a little stand. So I just take it with me wherever I go and can plug in and kind of get going, which is nice.
Oh, yeah, that's convenient for you, isn't it? You're living
For sure.
the nomad life, if I remember.
Yeah, evidently, yeah. I'm actually back in London as we speak, man.
Oh, nice. When did you come back?
Yesterday, jet lag is killing me. I didn't sleep till about 4 a.m., which was fun.
Luckily, it wasn't that hot last night. If you came
Yeah.
back to London like last week or the week before, you'd be dying. You wouldn't even sleep.
I heard.
There'd be no sleep at all.
I heard it's been bad. I had a funny situation last night though. I rolled over I think it was about 2 o'clock in the morning, and I saw the biggest spider sitting in my room. And I wouldn't say I'm bad with spiders, but I went to get the Hoover, came back to suck it up, and the spider was gone.
It's
And
gone.
I was like, nope. I was like, that room is yours now. I slept in the living room last night. That was it. I can't deal with these house spiders, man. They're too damn big.
Tell me about it, mate. Tell me about it. I can't do insects either. I genuinely
Fair.
can't.
Fair.
See this.
What's up, everybody in the chat? How is everyone doing? How's everyone getting on? I saw was it James hit 22R today? Bro, what's happening here?
22R. I have no idea.
Yes.
James is on a run. I told him he should donate to all of us.
Yeah,
Really
100%. James is just a pseudonym for Trump, basically. He's got all that insider information, man.
Probably Trump himself,
Yeah, exactly.
hiding behind James on this chart fanatic stream.
Oh man, imagine the views if we got him on. That'd be great. Yeah.
What's up, Sleeping Dolphin? Hello, Tom. Here for Imre. I don't know if I pronounced that right. Imre?
Imre, yeah, he was on.
I think
just
he was
before.
on before.
Yeah. His was actually quite an interesting stream. I was flicking back through it because we had the news come out. What was it about, like the treasury bonds or something? I'm doing some work to them. Where was it? I saw it hit, and that's where the market started going crazy. US Treasury announces increased sizes of nominal long end. I mean,
I'm gonna pretend I know what that was. I'm gonna pretend I understand
same. I was looking for them for some guidance to understand like what the hell that means, but the markets reacted off of it.
Was that? Oh, that was why we had that big reaction, right?
Mm-hmm.
Hey, I just saw it now.
Yeah.
What are you thinking for the markets today? Are you leaning bullish or?
So again, I'm primarily focusing on FX. I got stopped out of a trade on that announcement. I was
Right.
short. Let me put my charts up. Give me 1 second. I'll flick over and hijack for just 1 second. Have you got something coming up that you wanna?
No.
Yeah.
Take
All
the
right. Give me
stage,
1
take the
sec.
stage.
All right. Let me flick over to my charts. Sorry, 1 second. James took his 22R on Euro. Good God.
I don't even know what Euro movement looks like anymore. The last time I traded that was maybe like 3 years ago.
Are you serious?
Like I forgot how it even moves.
Do you watch any other markets apart from NQ, or are you just kind of tunnel visioned in on this?
Sometimes I watch ES,
Okay.
right? Because ES tends to give better rotational plays when it's in a balanced state of delivery, especially with consolidations. Because when you're looking at it from a trio standpoint, right, you have ES, YM, NQ. ES and NQ and YM tends to be on the extreme ends. ES is always, most of the time in the middle. So that tends to provide better opportunities for the rotational plays. But I'm mostly focused on NQ, to be honest, for my bread and butter. Sometimes I look at Bitcoin as well, but I think ever since May, if you look on a daily, geez, like, don't even want to talk about it. That was when I stopped.
Yeah. You can blame your friend Michael Saylor for that, I think. Ruined that market single-handedly.
Not good at all. Crypto, like, I'm not an advocate for crypto, I don't, like, I'm sure there's a lot of good projects and there's obvious backings with crypto, but it gets less and less believable as time passes.
I've never bought any Bitcoin. I don't know if anyone in the chat is any like hardcore into crypto, but I was always the person, like, back in the day when I think it was the last bull run, or no, maybe 2 bull runs before this. I was that guy. I was like, nah, it's going to zero. I wasn't buying it. I was not convinced. The tipping point for me, I was sitting in a Nando's with a friend, and I heard a little boy telling his parents to buy Bitcoin. And I was like, if that's not a top, like, I don't know what is. And lo and behold, I should have taken his advice.
That was literally, you can't even say anything about it. It's fully
genuinely
in Nando's, little boy. That's
genuinely.
the top of tops.
Yeah. You would have thought so, but he's probably sitting pretty, and here I am. So.
It depends on what he got. What was his order in Nando's? That would add more confidence to the top.
Yeah. Bao says, I only trade Bitcoin. Bao, I mean, your stress levels must be through the roof, man.
Literally.
Crazy times. Good morning, Gord. Hope you're doing well, man.
Right, let's see. Market's opening in 10 minutes. Where is?
All right, I'm gonna see if I can hijack this stream for a second.
Yep.
Get my charts loaded up. Okay, so I think I mentioned this on, when did we talk about this? I think it was Monday. It was before I flew out. I mentioned on cable, I was looking and hunting for a short play. And I think at the time that we were discussing this, I was in wait and see mode. And what I was looking for was essentially a breakdown of this short-term area in here, which we eventually got. And I started to build a short position. And every sign that we got that things was coming in my way, I added, I scaled in. I kept my stops up at the high. And as you can see, basically got absolutely annihilated on the news announcement. I already did not start to look good the moment we started punching fresh highs this morning. I was not in complete full size yet, but I was about 3/4 loaded. So I did take an L on this one. But I think now that we've had the move, we've obviously got FOMC meeting minutes later today as well. But I think it's given a little bit of clarity in terms of direction of where we could be heading for the day. I've got a couple other plays that I kind of want to throw out. I think the first one that looks pretty interesting, and I'll take it from a daily perspective here, is dollar Canadian. What will be the question here is whether we can get an entry. Where I think we're heading to is down to at least this range end low in here. I think invalidation above the current weekly high could make sense, but I would love to get an entry a little bit closer towards last week's range end low, which is where I have mapped out as this kind of blue shaded area. If we can get something like that, I think that makes for a very high probability play in alignment with the longer term trend. It would make for a complete rotation from month end high to month end low. I think it makes complete sense. And like I said, we're 80-90% of the way down there. I think squeezing that last bit out is probably looking like where it's potentially heading. The other thing I had on the cards for this week, let me find the right chart here, was Kiwi. So the New Zealand dollar versus the US dollar. This one I actually think could is setting up for a good potential swing play here. I am looking at, again, I don't have an entry on this as we currently stand, but I do think we're making this rotation back up to the high end of the monthly range. And this is actually a lot cleaner to me if you look at this from a weekly perspective. Again, ignore this week's current candle. We obviously don't know how this is going to pan out, but if you look at the prior 2 weeks, we had this impulsive move above range end highs, and then we've had 2 failed weeks to push lower and actually closed with some bids stepping into the market. This week we've come in, and if I show you down to a daily time frame, we've retested the high of this old hammer, and we have created a big impulse off the back of that. I think if we close and find some acceptance today of higher prices, any retracements going down into the remainder of the week, I will look at as a buying opportunity and see if we can get long to target these the monthly range highs. Those are the two, I think, most probable plays that kind of jump out at me. But yeah, small L to start. I say start the week. This was my second trade of the month. I've had very little going on for me. But those are the two things that I'm really kind of watching at the moment. There's been nothing else that's really stood out and screamed at me as a really good, clear opportunity right now. So yeah, I don't know, man. Taking my shots, being nimble with them, I think.
Are you more of like a support and resistance trader, or?
I would say support and resistance plus a little bit of supply and demand is my bread and butter.
Right, and that's the zones I'm assuming you marked out, right?
Yeah, so I like to, the problem I always had with support and resistance was I always found them quite subjective, right? People would draw lines on a chart and it'd be like, you know, everyone kind of draws them a little bit differently. They look at different places. So I try to make my areas of interest as objective as possible. So a lot of my areas are essentially just monthly, weekly, and daily range ends of that particular candle. So for example, like the range that I was playing here on cable is basically last week's high end and last week's low end range. And I draw them out as just reactive areas in price. They don't necessarily provide a bias all of the time, but I look for them as potential areas to do business, to see some kind of rotational move off, to kind of use as a range to measure risk, use a stop loss behind and around those areas. But yeah, it's essentially that monthly, weekly, and daily ones is generally what I swing from.
And what's your like average risk to reward that you go for? Are you more of like a high one or low?
So generally it's high, but you don't always see that represented in like the tools that I draw up, and it's largely because I average into positions. So my average price will change as the trade starts to develop. So I usually start with a relatively small position size, and then if the market starts to prove my idea right, I scale in and I add into that position, and it's often at a worse price because it's moved further away from entry. So it tends to evolve over time. So sometimes a lot of the plays that I'll take, so like for example in dollar Canadian, some of the plays, they look like a 1-to-1, but with the way that I scale in and then reduce stops on subsequent positions, my average winner versus my average loser is where my edge is essentially created. It creates a skewed metric on that. It's not always in the fixed risk to reward as what the trade starts, but the disparity between average winner and average loser size is what creates my edge. That's generally how I trade.
Interesting. So you never go into full size straight away. It's always
yeah. I generally break a position up into 4 separate positions. I have 2 that I will execute when things look relatively risky, so when the market is not really doing what I would like. But then as the market starts to confirm, I will add on 2 further positions. So for example, so like cable in here, if I was looking at this, if we ignore obviously what had happened after the fact and I show you what would have been an ideal setup, hypothetically, if I was bearish, I could have executed any couple of positions anywhere in this area, right? Until we start to lose some structural support, until we start creating some lower lows, lower highs, in alignment with the kind of direction that I'm looking for, I won't be looking to add any more positions. The moment we started to do that, I started to add further positions as we started to break down, which is why the risk to reward ended up, my average position ended up where it did. But the moment the market starts moving against me, I get defensive again. So as long as the market moves my way, I'm happy to add and scale in as aggressively as I can. If the market's moving against me, I kind of just sit on my hands and accept my fate for whatever the market really has in store.
Yeah. Do you trail as you add on, or do you just leave your stop in the original position?
I trail. So every time I get a new point of like relative invalidation, I bring all my stops and my positions down. And then usually what happens at that point is I'll scale in. So if, again, hypothetically, if I was to bar replay this, what I was looking for here was that price would create fresh lows in cable. And as that would have happened, I would have brought my stops from up here to here, but then equally sized up the position. And I continue to do that until price hits the target that I'm looking for.
Yeah, I see. That's similar to how I do it as well.
Yeah?
Yeah. When I scale in, I always want to like, so let's say I enter into a position with 1%. Yeah. If I scale in, the total loss I should be taking is 1%.
Correct.
But the position is much larger now. So my take profit is going to exponentially grow whilst my risk stays the same.
Nice. Yeah. I look at it very, very similarly.
Yeah. That's why scaling in is so powerful.
100%. I've always been a big believer that, and actually I took this from a guy called Tom Dante. Do you know of him? Or he's pretty he's pretty infamous in the space. He always said something many years ago that always stuck with me, and he basically said, like, when you've got the market by the balls, you just got to squeeze. and like it made complete sense to me. Like sometimes you have the market is showing you that your idea is correct and it's heading in the direction that you're intending it to do so. Why be fearful in that scenario? I think if the market is showing you that you're right, you should be adding, you should be scaling into it. In some occasions, obviously, it's not always going to work. Today being a prime example in cable. But like I said, that's what creates the disparity for me between my average winner and average loser over time.
Yeah, and it's also like, it goes back to the price action we've had this month. Like I'm sure a lot of people watching have struggled this month. So when the market is in good conditions, like specifically speaking, April, May, you really want to, squeeze the market's buyer's balls. That's where you're going to milk it out for as much as you can to cover these months like this.
Yeah, for sure.
All right, bell has just opened. Let's see what we get.
Tom says there's too many people became millionaires on trading crypto. Yeah, Tom, it's an interesting take because I think the almost the issue with getting rich in crypto is for a lot of people it comes very, very quickly. And I find when you make money very, very quickly, it's equally as easy to let it all go very, very quickly. When you haven't necessarily applied all the good risk management to grow something over time, it's one of those easy come, easy go. And I think there's a lot of people that became or made a lot of money in crypto, but didn't really know how to manage the risk. And so they may have done it by just getting lucky. And then they end up spending a lot of that money trying to recreate that luck. And they end up losing a lot of it in the long run. Yeah, I don't know. Personal opinion. Maybe I'm still salty after not listening to that tip from the kid in Nando's.
I definitely agree, though. It's definitely two-sided. Like, some say in order for them to even get to that position in the first place, they had to have that amount of risk. But it's the same amount of risk that is going to make them lose what they achieved.
Yeah, 100%.
Dude, like I don't know if you've heard about meme coins. I think it was last year, the last meme coin cycle, I round tripped so much. I literally, that was like the worst. I think after that was where like my stomach for crypto really got, excuse my language, but fucked up.
Yeah.
Like, oh my God.
I can imagine, man. I can imagine.
But yeah, after that, I don't think I ever wanted to touch crypto again. But
yeah, fair.
Let's see what we have. This is the current range we're playing in. Above yesterday's value area high. Like I said, if we are able to find acceptance above yesterday's value area high, which is what it looks like it's happening here. By the way, this is my value area high, value area low, volume point of control from yesterday's regular trading hour session. If we are able to find acceptance, buyers, we should have an imbalanced state of delivery. And I'm looking at 30,000 as the next level. Right, between here and 30,000, there isn't much levels that would act as support. Of course, you do have rounded numbers, right? Like 29,800, 29,900, and so on. But there's no like structural levels from what I'm seeing. If you look at the volume profile, right, there's just a massive CME gap, regular trading hours gap from Tuesday and Monday's open. And if you look to the side, this isn't really naked because we've already mitigated it. So two-sided delivery has been offered here already, two-sided auction. And you have this low volume node along with this gap over here, which I don't really like. When you're using regular trading hours and you have these gaps, I don't really consider them inefficient. But that's not to say there's resistance levels. But yeah, if we are able to find acceptance above this value area high, I'm looking for a nice up move to at least this level or around 30k. 30k is the next level of resistance for me. Oh, in the long run, I'm still bullish on NQ. I hate meme coins. Lost money on Shiba and Pepe. Dude, oh my God. I missed out. I didn't miss out. How do I say it? I lost out on around $150,000 with Chill Guy. I got in so early with Chill Guy, like 3 days before it even happened.
Crazy.
And then I sold it for like three times. I didn't expect it to explode that much. And then when I checked back on like calculated how much I could have made if I just held to the peak, it was around 150 to 200.
Please correct me if I'm wrong. I've heard though, and I say this not from personal experience, but I know this from a friend who was also big into meme coins for a certain time. Sometimes you'll see a lot of paper money, but actually getting an exit and getting your money out of the coin can be equally difficult, because he's told me situations where he's made stupid multiples on trading meme coins, but then when he's trying to cash out, there's no liquidity on the other side. Yeah. And he essentially can't sell.
Yeah, it's totally normal. It's illiquid.
Yeah, crazy.
That's going to happen, especially when the coins shoots up that much multiples.
Yeah.
In a small amount of time, there's never going to be enough volume. That's why you have to sell it in like small chunks.
Yeah.
You can't just sell it all in one go.
Yeah. What's up, Samuel? Good morning, my friend. Hope you're well. Sleeping Dolphin, I like Sanjay's safer style. In my opinion, when he's wrong, he loses small. That's exactly the aim. So like the idea is that whenever I test out, and this is how I always consider it. My starting positions are always like a test to see what the market wants to do. And most of the time when I'm wrong, I'm losing like a fraction of a normal position size. But most of the time when I'm right, I'm trying to size up and be as large a position size as possible. So that's why, like I said, like the risk to reward of what you see on the charts is not necessarily a representation of the actual disparity between my average size winner and my average size loser. But there's no one right way to do it. It's just what I found works well for me over time. What's up, Eric? My bold brother. Hope you're doing well, man.
Are we streaming on multiple platforms? Where are you reading these?
I'm reading these from YouTube.
Oh, it's up ahead. Oh, right. I see. We only stream on YouTube, right?
I think
Or
it goes out across a few others. I don't know if we do Kick and Twitch, but I think these also go on Instagram, maybe X. I'm not sure.
Pump and dump. Haha, you are the liquidity provider. Meme coins are more safer. James is on a bit of an energetic run today.
Yeah.
After catching that 22R on EU.
Yeah.
Or maybe his caps lock key is like broken and it's just stuck there.
Maybe. Oh man. Sam said cable. It reminds me of the Industry series. Yeah, that shows a little bit of age representative of the hairline as well. So
I haven't watched Industry. Have you watched Industry?
I haven't.
Apparently it's good. I need to pick up a show. I think my last series was Succession.
Okay.
I tried getting it. Yeah.
Have you watched Billions?
I watched it for one season.
You need to watch it. It's a good show.
Yeah, I watched it for one season, and then I think after the second or third season, it just got really. I don't know. I just lost. I just lost a touch for it.
There was definitely a pivotal point in it where it definitely became less interesting. I don't want to say anything to throw out spoilers for anybody that hasn't seen it. But Billions, I feel like, is a quality show. If you're into the markets, it's well worth checking out.
Billions is like, if you're a trader, that's like the epitome of what you what you hope your life is like.
100%. 100%.
Okay, so I usually wait for around 10 to 15 minutes into the session open. But if you're looking at it mechanically, this was a setup of a value area low, and you're looking to target the range high. And then this was also acceptance. This was also another setup, right? We failed to find acceptance above the range high. So now you're fading the highs back inside the range, and you could target value area low. Of course, here, there's no confirmation for me, because anytime I see absorption, I want to see initiation. Initiation is what moves the market. So there's nothing there. Matter of fact, this is where you have another short as well, potentially, because you have aggressive buyers here that were absorbed. You break low, you break below this passive protection level, because this is a passive protection level for those who are unaware, because you have aggressive sellers that got absorbed here. So passive buyers are protecting this level. Passive buyers protecting this level, aggressive buyers absorbed. Once you break below here, buyers are pretty much out of the market. So this is where you can short to volume point of control. But yeah, I don't take these setups for the first 10 to 15 minutes. I really want the market to just play out and settle down. Like Elliot Sim said, I got greedy on first day's trade, so I'm back to break even on my performance. Didn't like how I handled that.
I was just reading that.
Did you read it? Sorry, did you read it? Or
no, sorry. I was reading it in my head. I was getting ready to talk about it.
Oh, I think you could touch on it, because this is more like a psychology thing, probably.
It depends, right? I think, definitely the greed part of things. I think you want to touch on, like, you want to help to understand why the greed existed. For me, the issue is, and again, I'm sure Michael-san will probably be very, very mindful of this, but I always like to say the issue is never the emotion. The issue is your reaction to the emotion. So experiencing or feeling greed is not necessarily a bad thing. It's the acting on greed which makes it a bad thing or a detrimental thing for our performance. But the reason why I say it's not necessarily a problem is I find that greed doesn't just come out of nowhere and suddenly appear as part of your behavior. It starts from somewhere. There's a trigger. There's a moment in time where that mindset started to slip. And for me, finding and identifying those triggers are what make things productive in learning how to break that pattern or potential cycle of behavior. But yeah, I think you're doing the right thing. And this is going to sound ironic, but in moments like this, like you want to feel bad, right? If you're only ever rewarded for doing all the wrong things, it creates a very unhelpful cycle of behavior in the long run. So the fact that you got greedy, it didn't pan out, and you feel bad about it, it all makes for a good recipe to not repeat it in the future.
I think as long as you follow your edge, right? Even if you
100%.
take a loss, right? That's much better than not following your edge and taking a win.
100%.
In a nutshell.
100%. Yeah.
But yeah, guys, like, you know, going into the pre-session, I was hoping for higher prices, but you just have to do what the market gives you. Right? If the market after New York Bell doesn't continue higher, doesn't find acceptance above yesterday's value area, this is where you shift your narrative. Right? You either question, now there are two scenarios that could happen. We play within this value area and you're fading the range lows, or you're fading the range high of the value area, or we break below the value area low, and this is where you get an imbalanced state of delivery to the downside. But longs right now, they don't look too good because we failed to find acceptance above the value area high from yesterday. The value area will determine your narrative for the day. Well, not will, but it'll give you a very good confluence for determining the narrative, right? Because this was where the value area is where you have 70% of total transactions facilitated yesterday. So as long as we are above or below, then that is an imbalanced state of delivery, and you could expect expansion to that side. Hugh, can you tell something about delta on the left side of the chart? Yeah, so the left side of my chart is just a composite delta profile. It represents 30 minutes. So because I'm trading CME RTH, like this is the chart that I'm on, so the candles only show 9:30 to 4 p.m. This delta profile currently is 9:30 till 10 a.m. New York time. And then that just shows you at a cumulative level, per level, how much, like what the delta is, like who's in control, who's not in control on the aggression side. An example where you could use that as well is you see at this low where we don't necessarily have large big trades, and because I'm using normal candlestick charts, I can't see the delta clusters. Of course, if I turn on delta clusters, I could see it. But you know, when I'm on the big trades, I'm just focusing on big trades. You could use the delta profile to assist, because here at these four levels, you had -6, -69, -16, -29. So aggressive sellers are clearly in control at these lower levels. However, if the market doesn't continue lower, then they get absorbed, especially as, you know, we're coming into a key level, which is the value area low. And then you have that initiation higher. So you could use those to identify absorption as well when you don't have delta clusters. And it just gives you a much more general idea. Because even with delta clusters, so if I turn on, you know, my delta clusters now, right? Even with delta clusters, sometimes it becomes a bit clustered, right? You can't really gauge who is in control. So yeah, this is very helpful. Let's turn that back. Side flip. Hold on, bear with me 1 second, guys. I think someone is at the door.
What are you guys actively trading? Anybody in anything at the moment? What's up, Ricky? Hope you're all good, man. Let's have a scan through of what we're seeing on the FX side of things. Across a lot of the majors, I'm basically flat until daily candle close. Again, from my perspective, I would like to see some I want to see how the daily candles react off of some of the current ranges that we're presenting. Dollar Canadian really making a move for it today. I think we definitely aim for that sort of low end range. What happens from there will be interesting. These monthly areas tend to be very, very reactive levels. So watching the daily candle reactions in here, that could be the starting point for a fresh rotation to the upside. We could see the break and retest of that area for continuation to the downside. Depends where we go. Yeah, definitely a few things to watch out on. One that I am watching, and I think I spoke about this again on Monday as well. I think I was mentioning it to Noah. I am very, very interested to see what happens with gold. I don't know if we've got Billy in the chat yet, but I know he's an advocate gold trader. Gold, I mentioned, is in a very, very interesting spot. And from a higher time frame purely, I think you could make a case to say this could potentially go lower if you were coming in with a very, very fixed bias into this week, which would mean rallies to the upside could be opportunities to look for short setups. And in all honesty, I hadn't taken anything, but I liked the idea of what we saw after yesterday's rejection. But we closed right down into prior weeks or a few weeks ago, weekly range high, as you can see here, and actually provided a perfect rotation for the rally up. What happens from these highs will be interesting. That's what I'll kind of be watching for today. If we can't close to fresh highs after this, that will be very telling for me. And I think, again, could set up a fresh short opportunity. But I think time will tell. It'll be an interesting one to watch for sure. I'll keep my eyes on this throughout the week.
Apologies for that. I'm back.
You're good, man. You're good.
That was no one was at the door. It was a phone call.
Oh, fair enough.
Absolute nightmare. Booking a GP in this country is a nightmare.
Oh man.
Yeah, they called for an appointment and it didn't even ring. It barely rang, and they already ended it. So, gotta call them back later.
Fun times. Bao says I'm short Bitcoin. Fair. I mean, I think I spoke about Bitcoin on some of our previous streams. Long term, I like Bitcoin to the downside. Short term, I think we're stuck in a little bit of chop. This is the kind of range that I am focusing on here. So short in this area, I completely see it. I just don't have a potential play that's screaming out. Not this is a market that I trade, but one that I would be looking out for. I have nothing really. We have this marked up from a previous session, which would have worked out quite nicely. But there's just nothing really on the radar for me as we stand. But I like the area for sure.
I'm in a short right now.
Let's have a look.
I'm in a short. You see how this one plays out. Enter this on 2 positions. Pretty much. Running break even now. Okay, out on prop firms. +1R. Sorry, I didn't want to interrupt you, but I am in the short.
No. This is far more important than what I was talking about.
1 second. I'll explain the short, guys. Just give me a sec, because I did not expect us to bounce this much. So I'm currently out on prop firms. Trailing my stops here to this high. But essentially, what I saw was, hold on, let's see. See if we can break this level. All right, my stops are trailed to this candle's high now. Just using my TP. Trailing it to this high. This is where we have these aggressive sellers that should hold. Okay, I'm out. All right, let me. Okay, that was a quick ass trade. One second.
Man. That was clean.
All right, let me share my screen to. This one. All right, I'm not sure if you guys could see that. But yeah,
Yeah.
so took that short.
Nice.
Sharing back to the main monitor, and now let's break it down. Right, yeah, that journey just happened. Like as you was talking, I looked at the chart and I didn't expect a setup to appear just that quick. But essentially, what we had was it was the same thing I was speaking about previously with the setups. We had this value area low, which was yesterday's value area. If we break below the value area low, as mentioned like 5 minutes ago, 6 minutes ago, you're looking at an imbalanced state of delivery, which is exactly what you get here. You have large aggressive selling stepping in. Passive buyers are going to try and protect this value area low. If aggressive sellers step in and they really overwhelm the aggressive buying supply, then you're going to get a break. Now, what I want to see is a retest at the value area low, which is exactly what you get here, because the retest indicates aggressive buyers are exhausted, right? When the aggressive buyers are exhausted and passive buyers are pretty much overwhelmed by the aggressive selling demand, this means, that's a clear confluence for lower prices. I don't think there's more to say to that. So that is my confirmation. Entry on the secondary candle, stop loss at the value area high. Low risk to reward for prop firms, and then personal account, that was 4.5R. Nice. I think I got filled. Let me see where I got filled actually. And then I can refine it again. No, pretty much was perfect today. Yeah. So, 4.5, 4.3R, you could round it down to 4R.
How do you decide your exit for personal? I know obviously props are determined by, I think you said 1-to-1, right? You just
I do fixed reward for prop firms. It's just better for bookkeeping.
Okay, yeah, fair. And personal, how do you determine exit points?
Personal, I do. So it depends if you have naked. Okay, so if there's naked levels, for example, if I draw out this diagram, right, and then I'm shorting this low, if there's like a naked value area high here or value area low here, then that tends to be my target. However, if there isn't anything there, then I just target rounded numbers. So you could see like this level, I just targeted, around 29450. Of course, you could target 29400 as well. That's pretty valid. But it really just depends on also where you get in. Like, of course, based on that logic, you would target 29500s, right? But because you are in an imbalanced state of delivery, that's where I really want to extend my target and then just trail based on the expansion. Because this is what you get, right? When you are in an imbalanced state of delivery, you get these types of expansion. I'm on the 80 range. So from the candles open, from my setup to pretty much TP, it only took 2 minutes. Right? So these are the fast moves where you're going to make the majority of the money with my playbook. Of course, with rotational plays, it's the same thing, but your targets would just be more, conservative. Let's say I enter here, my target would just be at the volume point of control because there's more support and resistance levels. Right? So when it's in balance, there's not much levels unless you have naked levels from previously, or, I would use rounded numbers. Rounded numbers always have a bulk of liquidity, and that's always going to be places where you get, a battle orders, right? Like, just look at this. For around 29450, you get those you start to consolidate. Price comes down to around 29410, 29407. Basically rounded to 29400, you get that reversal. Right? So that's why rounded numbers work so well.
Yeah. Nice. I like that.
Am I too loud?
No, you're good. At least from my end.
I think watcher that said, can you maximize the chart and minimize the speaker head? I'm not sure if I'm too loud.
I think I don't know if he was just talking about screen real estate. Like what he's seeing. I think he wanted more.
Oh, he wants less of us, more of the chart.
Yeah. I think so. Mikeletsam says, Sanj, have you traded the futures market, even if it's the CFD side, and how was your overall experience? I'm yet to touch it. I'm going to start dabbling over the space of probably the next couple of weeks. I'm planning to start on futures firms. I think I've mentioned on a few streams, I'm planning to start some intraday trading, but I would rather do it on the future side rather than CFD. If I'm looking for better fills, less slippage, I've heard futures is the way to go. With CFDs, like I don't mind swing trading there because I'm not after super precise like levels and fills and things like that. A few pips here and there doesn't really hurt me. I have relatively wide stops. So Yeah, I'll share and document the experience with you guys. It'll be a whole new world for me.
Yeah, you don't want to touch CFDs for scalping, in my opinion.
Yeah, I've heard this a lot, which is why I'm planning the transition.
Yeah.
But the thing is, I've actually never played with futures at all, so it's like I said, it's just a whole new market for me. Got a bit of a learning curve ahead of me, I'm sure, but I think it's worthwhile. From what I'm seeing.
Still want your handsome face, but just the chart's too small.
Yeah. Grissine says CFD scalping is nice. I don't think I've ever heard that from anyone.
I think it depends. Like if you're on the 5 minute and above, maybe it's doable. Like if you're intraday trading, that is definitely doable. But if you're on like the 1 minute, the seconds time frame, like you might as well just pack it up.
Yeah.
You genuinely might pack it up. But also with prop firms, their fills are disgusting.
Yeah.
It depends on the prop
Are
firms,
the future side better?
Yeah, for sure. Future side is definitely better.
Yeah. Yeah, I've heard this. Seems to be a common consensus.
Okay, so now what I'm looking at, guys, is ignore that level. This now becomes the low. And then I'm looking at the value area high. I mean, value area low. And this is pretty much the range. Nice. But yeah, up 4.5R on this one and 1R on this one. So 5.5R already.
Do you ever give yourself like a daily target and say, all right, I've hit my target, I'm done for the day?
Not really. No. I feel like the way I see it, so I used to give myself a target. I think, okay, it's a bit complicated, but with prop firms, there's more of a target for me because consistency rules, and there's also like, it's just easier for bookkeeping, right? And this is the advice I give for most of the people I speak to who are struggling with prop firms, which I'm sure a lot of you are. If you are trading prop firms, the best way is to just take like one trade a day, because it's very hard to go on multiple losing streaks for days, right? Where people blow up is taking multiple trades within a single day and they blow up. So in terms of prop firms, I have like some sort of a target for that. But with personal, I tend to just execute whenever I see my setup. Because the way I see it is if I miss a setup, like if I miss the next setup and it ends up being like a runner or like a 5R runner, I actually missed out. I actually lost out on 4R, 5R to my edge rather than just not taking that trade at all.
Yeah. Do you ever give yourself a cut off to the downside to say, if I've taken 2-3 losses today, I'm done?
Yeah, literally 2-3 losses.
Nice.
Right, around 2-3 losses. Sometimes I can stretch it to 4. But that's if I'm rotating accounts. And again, it goes back to prop firms. Like with prop firms, I tend to rotate accounts to reduce my risk of ruin.
Yeah.
So that way I could, take more trades within a certain day. But if I'm on personal, it's around 2 to 3.
Okay. Fair. Grissom says, I'm in a 5-minute Dow Jones on CFDs as well. Yeah, you're a different type of beast, Christine. My entry time frames are the 15-minute and 1 hour, so spreads don't bother me. Fair.
Yeah, that's true. Intraday, like 1 hour is good for CFDs.
Yeah.
It's actually much better as well because you have the opportunity to hold it overnight, and you're not like, you don't need a lot of margin as opposed to futures.
Yeah. This has always been so far what's kept me away from futures, because you can't swing trade them.
Yeah.
And that's always been my bread and butter. So CFDs has always been my go-to.
I mean, you can swing on futures. You just have to have a fuck ton of money.
But you can't hold overnight though, right?
No, you can. You just need to have a lot of margin for it.
Interesting.
On prop firms, it might be different. On prop firms, I think most prop firms restrict you from holding overnight.
Yeah,
and your positions automatically close. But if you're trading personal, you just need a lot of margin. Like I think it's around 10 times the margin than you would need for intraday. Let me check on NinjaTrader actually for you.
Okay.
Let's see.
James says, "Do you guys understand candle range theory?" I have heard of the concept, but I don't really know the nuances of what it looks like. So I couldn't tell you, I'm afraid.
Yeah, so dude, one mini on NQ, which is like the standard contract size. If you're intraday trading, you need $1,000. If you're holding overnight, you need 46,518 per one mini contract.
What the hell?
So that's like a massive jump. That's why you have to be rich to hold overnight. Yeah.
Damn. So that's the flex that we're looking for. We're looking for futures traders that hold overnight. Then we know they got money.
Yeah, literally, yeah.
I don't want to see Rolexes and Lambos.
Well.
That's crazy.
What trade is he in right now? So yeah, I took this trade. This is a trade we're out of, and now there's no more trades.
I quite like your approach, Hugh.
In terms
Very
of
clean.
scouting?
It's just clean, it's simple. You got really like defined areas and plays that you're looking for, and otherwise just sitting, observing.
Yeah, I mean, I'm sure you agree. Like, that's the main thing. That's the turning point for me, actually. Like, you're able to take a lot of trades. I'm sure a lot of people are able to take a lot of trades. They're able to farm a lot of wins. But where a lot of traders mess up is they have those one day where it just ruins their whole, their whole week or their whole month. Like McElliotson, right? He had a losing day on Thursday, and he's pretty much back to break even. I'm assuming, he was up quite a bit on August, and then he went back to break even. Those type of days are the real killers. They're silent killers. The losses are the silent killers where you just don't know when to stop. So by having actual clear conditions where you don't, entertain anything within the market, in my case, anything within the range, I don't entertain. That is where you're going to stay out of low probability conditions.
Makes sense. Makes a lot of sense, man.
Yeah, you need to be balling to swing on futures. I hope I get there. That's the goal. I mean, I'm sure there's better options. Like, I swing trade on CFDs. With a personal account. Like, I just swing trade on CFDs rather than futures. It's just it's similar. The price action is similar. You swing trade on CFDs as well, right? Yeah.
Yeah.
What broker are you with?
What, personal?
Yeah.
IG.
Oh, is that good?
Yeah, I love IG. So I've only ever used two brokers. I started with Oanda very, very early on.
Yeah.
And then I think it was maybe four or 5 years ago, I transitioned over to IG, and I quite like them.
I'm using Fusion at the moment. Fusion Market. Okay. Before I was with IC.
Yeah, IC also quite popular. Them and who's the other one that's also quite CMC. I know a few people that use CMC to trade as well.
CMC? Haven't heard of that.
Yeah, CMC markets. I think they're pretty popular. But yeah, IG and Oanda are the only ones that I've personally tried out. But Oanda, they're pretty good, man. Sorry, not Oanda, IG. They're pretty solid. Have no real complaints.
Nice.
They offer I look for on the CFD side. I always look for just brokers that will offer spread betting. In the UK, obviously, it's tax free. Yeah.
Oh, so you don't actually, you're mainly spread betting, right?
Yeah, on personal, yes. For props, it's just the CFD side.
Yeah. If you 48k for one mini, but what about micros? Just divided by 10 to say. No, so one micro is probably going to be around 4,000 as well. So you can't you can't really game the system, It's going to be based on your position size regardless.
Watchula, if you do have conviction for the swing, options will be better risk profile for holding overnight. Options is also something I never really toyed with. Have you ever messed around with them, Hugh?
No.
Yeah, I've never
The closest
Sorry, go
I've
on.
got to options is maybe like options flow, options dealer hedging, gamma exposure and stuff like that. But I've never actually touched options itself in terms
Yeah.
of executions.
I've never really toyed with them. I looked into them a little while ago, but I don't know. Again, whole new world.
I don't know what it is though. I feel like a lot of new traders, the first thing they do is like options. I don't know what pulls them into it.
I can only think it's the relative potential for like reward. That's what they see.
They
But
just see the
there's-
high reward, but not the high risk.
Exactly. Gopi says, what strategy do you follow for swing trading? I don't really have like, there's no name for it. It's just for me, it's a blend of support and resistance and supply and demand. It's just a blend of things that I learned and observed and have seen working time and time again. Kind of molded them together. But I don't really have a name for it, I'm afraid.
I feel like when you've been trading for so long and you've really found your edge, there's just you can't say it is a single strategy.
Yeah,
you're just trading.
The thing is, I find if you look at most strategies now, they're all just reworded ways of saying the exact same thing.
Yeah.
So I just don't I don't buy into the idea that I'm like an SMC or an ICT. Like I don't know. I have a set of criteria that gets me in and out the market. I don't really have a fancy gimmicky name for it, but that's it really.
That's another turning point. Like no strategy is the holy grail, No strategy beats market intuition or discretion.
The thing is, you only get to that level of intuition and discretion through experience.
Yeah.
You need to put in the reps. You need that screen time.
There's no shortcut to it. There's no easy way to go about it.
I always quote Alex Hormozy on this. He has a beautiful quote. He says, "The long way is the shortcut because the shortcut never gets you there," and I think it's so true of trading.
The long way is the shortcut because the shortcut never gets you there.
Watch Alert says, Hugh and Sanj, is there a trade copier for MT4 and MT5? I think there's a couple that I've heard of.
Traders Connect.
Traders Connect is one of them.
I think that's the main one with CFDs, right?
They're definitely a popular one. There's one other one that I know. I think it's called. Hold on.
Oh wait! I do have one. Wait. Trade. Hold on. I used one. I don't know if you remember. I don't know if you was copy trading when Traders Connect had their like MetaTrader license removed.
I've heard about this.
And then I switched. Yeah, that was when I switched because I was still trading CFDs back then. I think that was like last year. That was when I switched to Duplicium. Duplicium.
Oh,
I don't know how you spell it.
I've never heard of that.
I don't know how you. Let me type in chat. Duplicium. Yeah, it has a weird spelling to it. But that's another one as well if you want to use. I think this one is cloud-based as well, so you don't have to like have something running at the same time. It's not local.
Social Trader Tools is the other one. That was the one I just googled as well. Those are the two that I've heard of that are quite popular.
Yeah, Social Trader is the OG one. That's been in the game for a while.
Yeah. So Watch Alert, I think those are probably your best options. Sleeping Dolphin, options have huge leverage, defined risk. Options is F1. I don't know if I can handle the information overload yet. Maybe when I'm balling 100k plus on disposable capital.
When you're balling 100k plus, you're better off just reinvesting it back into what was working.
Yeah, true.
Yeah, these complex names have a way of messing with identity. That's where people get lost in the source. Trading is just performance. Leave those ICT, SMC identities at the door.
I agree. I think you're going to hurt a lot of people that are diehard, especially the ICT cult fans.
Diehard cult, yeah.
Yeah. I'm not sure they're going to agree with that, but I completely agree with you, man. Like I said, I've always just seen them as same ways of explaining the same sort of thing.
Yeah, it's the same thing, different angle.
Yeah.
at the end of the day, everyone's looking at the same chart.
Yeah, 100%.
Everyone's looking at the same chart.
Price is price.
How do you like, because you're swing trading, do you have like a set time for when you analyze, or is it just like throughout the day?
So generally, I either have one or two things. Either I have specific areas of interest that I want to be doing some business in, and they will sometimes, I'll leave like a limit order in that gets triggered at, and I don't really care about specific sessions or time of day. I'll just let them get triggered. But generally, if I have an order in, it has a relatively wide stop. And again, it's my starter position. And then I manage the stop, scale in if they start to work out. Otherwise, I would say 70-80% of my work is done on daily candle close. I want to see like a good narrative and context frame from the daily perspective. And that builds the idea for everything that happens after that.
Oh, I see. So during like New York session, you don't really. New York is more of just like a chill session for you, right?
Yeah, I like I said, unless I have positions on and I'm looking to add and scale into them. And again, those only happen at specific areas. Unless price is in one of those specific areas, I don't really have a lot to do. I normally just wait for a daily candle close. And you know what? To be honest, a lot of that is for a lot of people, it seems very inefficient. But it's a lot of what helped me to find consistency. So waiting for a potential setup and knowing that if I've taken a loss or a win, like for example, today, I got stopped out of cable. And for me, I know there's nothing I can do now until the daily candle close. So now I just sit on my hands and I wait. Any emotion that I had from that trade is usually gone by the time we hit the daily candle close. So I just chill and I wait till then.
Nice. I think waiting is the killer for most people.
100%. I always say it's boredom. Boredom's the silent performance killer. People just don't really know what to do with their time. Cody says, what's your value area percentage set at for your RTH volume profile?
68. It's always 68. On like regardless if it's electronic trading hours or regular trading hours.
Options are amazing in certain market conditions, like a strong trend with good volatility can pay insane profits. The thing is, from what I know of options, I think that's what you really need. Because I think and again, please correct me if I'm wrong. I feel like the hard part about options is you're not just betting on direction, but you're also betting on time. And so having a trend on your side makes so much sense. You eyeing up something here?
I want to see sellers take back control here. Right, like all of these sellers that didn't get rewarded, it just put me off. Like taking this play, because this level is basically it's not really. It's a level in, in a random area as opposed to this value area low, where we did have the selling initiation on our side and they did get rewarded. Here we kind of didn't really have much. Like the candle kind of just broke below the range low. And then you have aggressive sellers, but you see how many aggressive selling there is here, but the market isn't continuing lower. So I'm waiting to see if this level could break out, and then that would be a short on confirmation that buyers are absorbed as well.
Yeah.
But it's the same thing every single time. Like anytime I break out of the range low or range high, I'm either waiting for absorption or waiting for a retest, depending on the market circumstances. See.
What's your win rate, Hugh?
On prop firms, it's around 70 to 75%.
Nice. And personal? Does that vary?
Personal is around 30 to 40%. It's actually increasing quite a bit, though. I'd say
is that because of the difference between your risk to reward on how you manage each?
Yeah. Like personal, I'm more, personal, my average risk to reward is around 2 to 4, 2 to 3.
Yeah.
And that's based on trading.
Yeah.
Prop firms is going to be much higher simply because of the way I'm entering, right? You could see from all of the trades that I'm taking, there's always a reaction. That's because I'm using actual levels where you have passive protection, or strong levels of confluence in the form of value area highs and value area lows. So that's why with prop firms, I could just get a reaction, like I'm profiting off the reaction, and I could still be wrong on the entire move. That's where the win rate comes into play.
Yeah, fair.
But yeah,
that's the. Sorry, go on.
Yeah, but personal is pretty lower because one, I don't go break even as soon as possible. I like to let price develop. By the time price develops is already around 1R. So I would have gone now on prop firms by then. But on personal, even though it's developed after 1R, it could still take me out.
Yeah. That makes sense for me because there's generally always an inverse correlation between win rate and risk to reward. So the moment you say that you got a higher risk to reward on personal, I was expecting that there's going to be probably a lower win rate attached to it as well.
Yeah. I mean, in an ideal world, the win rate is the same, and then I'd be balling. But
yeah, you'll be swing trading futures, man.
Literally, yeah. Hi, Sanj.
What's up, Arhat? Yeah, sorry, I was reading the same one.
Is it? Oh, the one where he said hi.
Yeah.
Oh, yeah. Yeah, you could do that.
Yeah. Hope you're good, man. Jupe says, what program are you using?
Exochart. But you could use Deep Chart as well. If you use code CF, you get 30% off. I just use EXO because, that's what I've been using for the past couple months. Well, not past couple months. It's been nearly a year now. And, I'm used to all the mechanics, but Deep Charts offer the same thing. Have you set up the trade? No. There was no trade here for me. Right, because we had a retest, but there was no buying absorption. And ideally, I wanted this level to go. This was a passive protection level. If this level doesn't go and I enter off of above here, then there's still the chance that these passive buyers are going to absorb these aggressive sellers over here, which, by the way, it did. So nothing is ever random. That's why I didn't want to play this short. Right, these are strong breaks. Large aggressive selling, they get rewarded. Break below passive level. Next candle, the same thing. The next candle is a confirmation. Aggressive buyers try to step back in. They don't get rewarded, followed by selling initiation. Right, clear reward for sellers here. Clear these aggressive buyers clearly didn't get rewarded. They got absorbed. So, compare this one to this one over here. If you see I've got testicle. Is your chart on 1 minute? No, so my range chart. So I trade ranges, right? I trade a range chart. The right chart is the 80 range. So from the low to the high of the candle is around 20 points. 80 ticks divided by 4 ticks is 1 point. So the open to the high, or the high to the, the low to the high and the high to the low is going to be approximately 20 points. And the candle doesn't close until it's reached 20 points. The left side is the 30 seconds time frame. I don't really use this. I just use it because ExoCharts has a bug with big trades not showing properly on the range chart. So I just use the time frame chart where it's not buggy to confirm the big trades.
Two truths can exist. The wins are great when you capture them at the right move. The losses can be exponential when you're on the wrong side of the move. That's why I fear the options market overall. Yeah, there are some traders that do pretty well in the option side, but again, I think outside of my realm of expertise to probably speak on.
Yeah, I can't say much about it either. It's definitely a whole different playground.
Varuna says, what is the charting platform? I think he mentioned ExoCharts, right?
Yeah, ExoCharts.
Yeah. Watch Alert says, and the number in the circles are the volume? ?
No, so the big trades are aggressive participants. So here you have aggressive seller, 120 contracts. ExoCharts uses singular. So this is like a single contract rather than cumulative. And this is what moves the market, guys. Like this is literally what moves the market. When you're in the market, there's only aggressive players and passive players. Passive players are those with supply. Aggressive players are those with demand. If you have large aggressive demand in the form of here, right, and they get rewarded, that means the supply is depleted. There isn't enough supply here to fulfill these outstanding demand. As a result, the market has to move lower. However, if you have a lot of demand and the market doesn't move lower, it doesn't reward these aggressive sellers, or let's say, you have an aggressive buyer and they don't reward it with higher price action, then that means there is more passive supply than aggressive demand. As a result, the market has no reason to move lower or move higher to satisfy the outstanding demand, because there's no outstanding demand in the first place. So that's what these bubbles are. They're not volume bubbles. Yeah, I mean, nice bearish expansion lower. Looks like we gained that retracement. Coming back inside his range now. Is that a trade you are currently in? Or
Sorry, is that a question or are you throwing it my way?
yeah, your way.
No, I'm flat at the moment.
All right.
I've had very little opportunity. So I watch a fair, like quite a range of markets. And there have been certain periods, like earlier in the year, I was getting potentially like 2, 3, 4 signals a week, which for me is quite a lot.
Yeah, that is a lot.
This month I've had 2 the entire month. I've executed on both and took an L on both. that's been my month so far.
I mean, that's part of trading.
Yeah, I mean, I was gonna say this is the downside of swing trading at times when you get little options, like in terms of like signals actually presenting, and then they just don't go your way. The hard part is just sitting on your hands, trusting that conditions will change, things will move back in your favor. But yeah, it's just one of those periods at the moment.
Hopefully Q4 gives us much better price action. It tends to always give us much more follow through as well during Q4.
For sure.
I think we have midterm elections as well.
Are they coming up?
In Q4. Yeah, Tuesday, 3rd of November. So that should spice some things up.
Nice.
We do have FOMC meeting minutes today.
Yeah.
But, it's not FOMC.
Yeah, it's usually the press conference. I think somebody asked this on the stream on Monday. They were asking about FOMC specifically, and I was saying I don't know if there's going to be a huge reaction off of it.
Yeah, I mean, the main thing you want to focus on is always going to be, the actual Fed funds rate and the FOMC statement, rather than meeting minutes. I think the next one.
Press conference is where it gets spicy, man.
Oh yeah, press conference is always fun to watch.
Yeah.
It's always fun. I think the times I've gambled on it, I'm pretty like 0 for 10 or something.
Really?
Yeah, it's never gone well whenever I try to gamble it.
There's not good odds.
Never good odds. But yeah, the next one is September 16th.
Okay.
So that is also something to look out for. And then, like going into September, mid-September to the rest of the year is going to be spicy.
Cody says, this has been a rough month, barely green for me. Cody, I think the important part is always to focus on just the execution side of things. I'm the same as you. I'm in the red for this month as well. But you have to focus on like the question I always ask myself is, if that trade set up 100 times out of 100, would you pull the trigger? And as long as you can answer yes to that, then there's nothing to regret or worry about. It's just the market being the market, variance doing its thing. As long as you've protected capital, I think you've done all the right things, man.
Yeah, not every month has to be a green month.
Mm-hmm.
Not every day has to be a green day. Not every week has to be a green week. Has anyone taken anything so far? Anyone taken any trades on NQ? Any other assets? Let me know if you guys want me to break down any other assets as well. Open to doing it.
Take Hugh out of his comfort zone.
I mean, it's going to be the way I view it is going to be the same thing on every single asset.
Looking for the same thing.
Yeah, supply and demand. It's just supply and demand.
Yeah.
DXY. Wow.
There we go. Straight out of your comfort zone.
I was hoping someone would say like maybe ESYM.
Yeah.
You know, came in with a DXY.
I'll get active in the chat. I'll throw out some things you like.
Gold as well. Okay, gold I can do. DXY. I'll give my opinion on DXY on the higher time frame, and then you guys let me know. So let me. I think I think Sanj is more. Sanj is probably better with DXY than me, but I'll tell you what I'm seeing. By the way, this is my first time opening. This is my first time opening DXY in a couple months. So starting with, the weekly balance, and you could tell from the wicks of the candles. Anytime you come above the highs, anytime you come below the lows, they're getting faded back inside the balance range. So the weekly, we are still in a balance range. However, we had this happen. So these aggressive buyers were absorbed, right? I'm using order flow terminology, but I understand DXY isn't necessarily a futures asset. But these aggressive buyers, they get absorbed. Responsive sellers step in, and we're coming back inside the range now. So after we've had this third acceptance higher, you could lean bearish. However, you still have to be open to the idea that we could potentially continue, balancing around here, right? Not potentially, but there's a very high chance because this was a balanced state of delivery, right? But that doesn't mean on the lower time frame, such as the daily, 4-hour and so on, there's not going to be any opportunities. That's just something you have to know on the weekly time frame for when the market doesn't go in your direction. But when you're breaking it down from the daily, this is a range. Aggressive sellers become more overwhelming in demand. They break below the range low, and then you start to find another level of acceptance. Anytime you have consolidation, anytime you have two-sided price delivery, that is a healthy trend, right? Here is a healthy trend because you have acceptance above here, downside acceptance below here. So this is a healthy bearish trend, and the market is clearly accepting lower prices in the form of these consolidation where both buyers and sellers are satisfied. And if you're looking at, the current day, I think Sanj touched on this with the government releasing something. If I remember, Treasury, it's something about Treasury. And that's what we had here. So, sellers are still in control here. Of course, you have previous levels of balance as well. But let's focus on this leg for now. You don't really want to confuse yourself with this leg over here. This is just going to give you anticipation levels. But with the immediate time frame, sellers are clearly in control here. So I'm still leaning towards bearish price action on DXY, right? I'm hoping for another range to potentially form similar to this one, and then depending on how the range forms here, then you can look to continue that short to the downside, right? Where it becomes a problem and where the narrative changes from bearish to bullish is if we don't get a range and we get an immediate rejection away, right? Because that means responsive buyers stepped in and they rejected lower prices. However, another way is if we get acceptance here, but aggressive buyers take back control and we come back inside this range. Then that is where I'm looking to maybe ease off on shorts. But for DXY, I'm still leading towards bearish price action. I just want to see acceptance. That would further confirm it.
Nice. Can I was gonna say I'm gonna flick over to my charts for just a second because I'm gonna pull up a blank chart of DXY and just give my 2 cents because I have a very similar outlook to you. But the areas that I'm looking at for a potential reaction, I've got one slight variation of this. Let me get flicked over to my chart. Give me 1 second here.
Yep.
Okay, so as I mentioned to you guys at the start of the stream, I focus on primarily monthly, weekly, and daily ranges for potential areas of a reaction. We'll take the yearly out of the equation. That is one that I often drop, but we'll take it out of the equation primarily just to keep things simple for the stream. But if you look at where we are, you can see that the month of June presented this bullish engulfing candle here, right? Broken out of these range end highs that we were consumed within. So what I would be drawing up is a range that consumes the top end and a range that consumes the bottom end. And then I would basically go on and refine these, usually on a daily time frame, right? So I'll do this for you guys now. The reason I wanted to point it out was only because we're approaching a very interesting area. So if I go onto a daily now and I look at, again, those similar range extremes, you can see that after the dump that we've had today in the dollar, we are sitting in that lower end monthly range. Now, that doesn't immediately presume that we're going to bounce and reverse here. Again, I look at these areas as more of a place of potential reaction, and then I'm watching to see what price wants to do. I would have probably a very similar view to Hugh here, which is momentum is most definitely to the downside. What I would prefer to see is a close down below this area range and then watch for a retest and a reaction from here to continue onto the downside. But if we stop, if we consolidate, if we fake out this low in here, we create a little bit of like a swing failure, a sweep of liquidity, whatever you guys want to call it, that could create for the counter trend. And then we see a rotation back inside of this monthly range. But this sort of price action where you see a rotation from one end of the range to the other is a very high probability play. I was doing, if you remember, I was looking for the same thing on cable, but just from a weekly end, right? You've got weekend range high, week range low, and we play from there. But if you look at what we're playing at in the grand scheme of cable, we've seen a rotation. Like cable is actually playing in, if you look at the range that I've got drawn up here, this is the range that's been established since July 2025. And you can see we've had variations on either side of it, but really 80-90% of price action has been within either of these two areas. You take a view of, we've played off of the lower end of the range here. The most sensible upside, and again, it's a swing target, would be the top end of the range. Doesn't mean it's going to go up in a straight line, obviously, but that would be the kind of consensus of what I'd be looking for. So for like DXY, like I said, it's just in an interesting area for me. So I'll be watching price action from a daily perspective and seeing what price wants to do here, but looking very, very likely to probably at least want to sweep these lows. And then we see what happens after that. A dollar Canadian, I think I mentioned this one earlier, come down to that area, which basically invalidates the trade that I was looking for. But again, back down, monthly range end low. Now we sit on our hands, we wait and observe and watch for a potential reaction in this area and see what price wants to do. But yeah, that was it. Sorry, just wanted to add those that little nuance, man.
Oh, good. You're much better with currencies than me. I haven't touched this in a hot second.
No, I mean, like I said, I'm 0 for 2 on the month, so I wouldn't say that so far.
Do you use like liquidity points as how do you view liquidity points? Is it just swing high, swing lows?
Yeah, primarily.
Right.
But I don't often call them like liquidity. I say that because that's what most people will probably understand them as.
Yeah,
I just look at them as swing highs and swing lows.
Yeah.
I like to see rejections off of them at times, potential target points, but I don't see it as, I don't know. I've never really looked at it as liquidity.
What would you say your like best entry models are? So swing failure patterns then, or?
Yeah, swing failures are probably some of my favorite.
Yeah,
Definitely
they used to be my
favorite
when I used to trade price action as well.
Yeah, either swing failures or big shifts in momentum. So what I often like to do is, especially when we're coming out of a relative period where we've basically just been stuck in range, when you get a good strong momentum break to the outside, chasing that momentum in a specific direction can provide sometimes some good plays, but you need the right market conditions for that as well. And FX is becoming very tedious for this. It just tends to range more than it likes the trend. So it's become a lot more of a difficult market to trade over the last few years.
Yeah,
At least swing trade.
Your ranges would work much better with these ranging markets, right? Because you get a lot of rotational plays, like you said.
Yeah, for sure. 100%. Pranay says also mentioned gold. So I think I touched on gold a little bit earlier. For me, I'm very much on my hands at the moment. But what I wanted to see was the reaction from this high, because from the higher time frame, I was looking at a potential rotation in gold here. So like similar sort of thing that we've been talking about. We've got this weekly candle here from the 8th of June. And we've basically spent the vast majority of our time in between that range. We had rotation from the low end to the top end of the range. And I wanted to see if we could get a rejection from here to continue that kind of game of ping pong back to the downside. But it all relies on this essentially holding. But it's the bias for me is being framed primarily from a weekly perspective here. So only a weekly candle close above and through this area would kind of start to invalidate it. Otherwise, from a daily perspective, I'm waiting to see the daily start to align if it's potentially going to be the case. But I mean, if today closes anything like it does here, it's looking very bullish for me.
Bake said there is good trade was going on when you talking. Are you speaking for NQ or are you speaking for a different asset? Because for my model, there wasn't much. Like the only trade that you could have potentially taken was this one over here, because when you look at from when you're looking at from the range that I marked out, we get that break below and we fail to find acceptance below the level, right? Aggressive sellers were getting absorbed. Of course, I wasn't so keen on taking the initial retracement back because I was still eyeing the break and retest. But you could have taken this retest over here because this would confirm this level as a passive protection level. Because when you have the first initial, so if I replay here, and then you have the, okay, never mind, let's not replay because that just breaks the chart. But if you have like the first initial tap here and then you come higher, there's obviously not that much confluence, confirmation that passive buyers are protecting this level yet. So when you have this retest, and yet again, you get large aggressive selling, but they don't get rewarded, then that is your confirmation, right? Secondary candle closes bullish, confirming the initiation. And then you could obviously target, enter there and target potentially VWAP over here. However, to be honest, I wasn't viewing this because I was mainly focused on break and retest. I wanted to see a break and retest. Just to capitalize on the down move. Since the moment we broke below the value area low, you're shifting from a balanced range to an imbalanced state of delivery to the downside. So I'm not really keen on taking longs, but you can back in, and it will just be a mean reversion play back inside the value area, which is pretty much what we had here, what we are having here in hindsight.
So we're approaching potential area of interest for you now, right?
This one over here?
Yeah.
I would be favoring break and retest to the upside.
Okay.
I wouldn't look for rejection here now, even though like it's still a range, and this is where market intuition comes into play. The way I see it is we came lower, but we failed to find acceptance at a lower price. I don't like to take mean reversions within the same day.
Yeah.
I mean, I don't like to take rejections within the same day. If we fail to find acceptance.
Nice.
So then if the market, continues higher now, and then you get a break with a retest, then I could enter off of that and, go long. But this is going to be a problem, this volume point control over here. When I enter, the absolute best A+ trade is if there isn't much, the distance from my TP to wherever the next level of support resistance is. If there is a large distance, then that is going to be the highest probability trades, like this one over here, right? That's why I tend to, I tend to stay shy of these type of trades, because let's say you get a break and retest, and then you have a confirmation here, and then I enter here. My stops are obviously going to be somewhere below here, like that. Of course, it's still a decent risk to reward, right? It's still a one risk to reward in terms of profit. You can still take it, but the highest probability trades will always be if the level to the next level of resistance is much further away. Yeah. Even though your TP is lower.
Got you.
Right. So, like I said, right, I don't want to see rejections here, and rightfully so, because even though you have large aggressive selling here, trying to step in as we approach this range high, you're not getting that rejection. Aggressive buyers are extremely in control here. heavily in control, right? Aggressive sellers, they failed to find acceptance at lower prices. We're coming back inside the value area. CVD is obviously higher as well. So yeah, like from the sessions open, if you look at CVD, we've pretty much created, so this is the high. We created a high on CVD now, whereas the market has still created a lower high. This could mean two things. This could either mean aggressive buyers are getting absorbed or aggressive buyers are in control, right? So there's always two sides of CVD. Where the confirmation comes into play is with context with the price action. We've had, like I said, failed to find acceptance, large aggressive buying stepping in here. So within this move alone, within this leg alone, the CVD was able to overwhelm the past sessions price action over here, right? And created a higher high. So right now, I think buyers are still in control here. Buyers are extremely in control here. And we should come back inside the value area and start to just play around there.
Does the break above VWAP also add as like a confluence for you as well, or?
Yeah, as an internal level, but I would still need to wait for break and retest. And this was a trade that I took on Monday. Yeah, Monday. Let me break it down for you guys. Yeah, it's actually a nice thing that you added that, because I did take a long on Monday with that exact setup. I think it was Monday.
Nice.
Was it Monday? Where was it? Hold on, I'm not too sure it was Monday or not. Tuesday. Wait, no, this is still Tuesday. Oh, Monday's here. All right. 9, Friday, Monday. Okay. So this is Monday. Let me open up the time frames as well, because I don't think the big trades are showing properly on here. And then... Right, so you guys are really going to have to focus here, because the axis, focus on the axis, right? Because that is showing you where the big trades are. The reason why I have two charts but different time frames is because the right chart is pretty bugged out because it's the range chart. The big trades don't show properly. The left side is showing you the proper big trades, but the price action is different because it's on the 30 seconds. But Monday, this is what we had, right? So this was the open, and then we started to range on Monday going into 9:30 open. Yeah, this was my range. So in this instance, VWAP was acting as an internal level. When we are within the range, the only trades that I take is either no trade or break and retest off of internal levels. So that could either come in the form of passive levels or VWAP, which is exactly what you had here. So we had the rejection at the OBM low, at the range low. You're breaking above VWAP here now. So now this becomes a break and retest play. If you look at my mouse on the axis over here, break above, candle closes bearish, and then you have this secondary candle over here. This candle, zooming into this time frame over here, you have a large aggressive selling at 33 sell contracts within this candle. So, you know, obviously it's not pinpoint, but somewhere around this wick, you had selling absorption there. And that is a key, that's like a textbook setup. Break, retest, sellers absorbed. So this is where, once you get that, this is where you could enter off of here, or you wait for initiation, which is the secondary candle, enter there, stop loss below there, or stop loss at the VWAP, depending on how aggressive you are. And then you could look to target, you know, either the high, or I targeted 30,300 because I was anticipating for us to break above. Obviously, in hindsight, we didn't get that. So I was targeting that, and then I trailed to around this level over here. That was why I got exited out for round 2R.
Nice.
But that's how I would use VWAP as well.
Nice. Watch Alert says, what is CVT or CVD? Cumulative delta?
Cumulative volume delta, yeah. So you see, it's pretty much like within the name, right? I always have a hard time trying to explain cumulative volume delta because it's in the name. But delta is the difference between aggressive buyers and aggressive sellers. If I zoom into the footprint bar statistic, like this, let me try to expand it. Here, you can see that each candle, there is a total amount of delta. Cumulative volume delta just adds this all up within a session, and then it prints this chart over here, and that is showing you the total. So this is the line, right? 0 is the baseline. If we are above 0, aggressive buyers in total for the session are in control. If we are below the 0 line, then aggressive sellers for the session in total are in control. The reason why I emphasize on aggressive play participants is because delta is the difference between those aggressive players. Don't ever get that mixed up with range. I mean, not range, passive. All right, you see here, as anticipated, this is where you're getting the battle orders. So now, the market is battling between buyers and sellers because buyers want to bring you back inside the value area, but sellers want to hold control here and control the narrative. However, I think we'll break above. It looks very unlikely we'll reject, especially as we've broken above VWAP as well. But let's see. The big trade you use is an open contract or delta volume. It's a single aggressive player or a single aggressive contract. So, you know, here there was a selling contract of 32. Here there was a selling contract of 98. But of course, depending on the platform you use, it could also be calculated differently. But generally speaking, for extra charts, that's what it is. I know Atus does cumulative, but extra charts does singular. You must also look if CFD makes big candle, the candle on chart must also be big, otherwise you have absorption. Yeah. Yes and no. Because that's like to be honest, that's too nearsighted. You always have to follow the overall narrative and the overall price action. Absorption doesn't get confirmed with just one candle. Well, if you're using CVD, that is. With big trades, you know, a lot of times it does get confirmed with one candle when it's clear like this. But CVD is a bit complicated because it takes into account the total delta. Gord Funded said you should get back to day trading straight away, Sanj.
Yeah. I'm on it, my friend. I'm on it.
I think Sanj will do extremely well day trading. He has the patience for it.
It'll be very, very interesting. I mean, the last time I really tried, I absolutely sucked, but it was many, many years ago.
Yeah.
And I'd like to think I'm a very different person now. I have a very different mentality towards the market. So
sure.
it'll be very interesting.
Like the scalping, I think the number one issue with people becoming unprofitable with scalping is that it's psychology, man. Like they think just because they have more opportunities, they need to take more trades, or because the time frames are so small, they're like impatient and they can't wait for the next trade. I think that's the main thing that messes up a lot of scalpers.
Yeah.
Thank you both of you for explaining. Just the first time joining, wanted to get the abbreviation right. You're welcome. We do our best. We try our best here.
God says, would it be order flow, Sanj? I've been very intrigued by the whole order flow side of things. When I initially decided that I was going to go back to intraday trading, I had no intention. But I think the more and more that I've been exposed to it, had conversations with people using it, it just, to me, it makes sense. And I like things that make sense. So I'm very open to learning more about it. But like I said, it's a whole new world for me.
I mean, it's extremely simple once you get used to it anyway. Like, at the end of the day, it's just supply and demand. There's just two participants. That's all you're measuring.
Yeah. Well, I mean, it's real supply and demand. You can actually see it, right? Unlike the CFD side, you're always just limited by your broker's volume. But this is all centralized, which is nice.
Yeah, especially if you're trading centralized exchanges. All of the orders have to be routed through.
Yeah. There was that time when Bitcoin was leading the S&P. Oh man, that must have been nuts for the pros. Bitcoin has been very, very quiet.
Bitcoin should just die and all the cash should just be rotated into other meaningful assets.
Yeah.
Like the volume should just come to NQ, you know, Forex.
Yeah.
Bitcoin should just die. Good for nothing. Yeah, but that's just my opinion. That's just my opinion. Guys. Don't kill me.
Oh god. Do you own no crypto at all?
No, I used to,
Yeah,
but
yeah.
not
The
anymore. I
battle
sold all of it.
wounds. Yeah, fair. The only thing I'm still holding is XRP, but a very, very, very small amount. I say still holding. It's the only thing I've ever bought in the crypto space.
I think back then, like, when did you buy it? Maybe like 2-3 years ago.
I've basically just been buying it on every momentum pulse to the upside, but I've been doing it since probably I think start of last year. I think is when I first started.
All right. Yeah, because there was a time where, like, I think this was in maybe 2022, 2021. Any
Mm.
person you asked, especially in London, what crypto did they have? They also XRP.
XRP. Yeah, XRP army. That was it.
Literally.
Yeah.
Do you have now a level we have some sellers on VWAP? I mean, we're above VWAP. This is the level we have. Hold on, let me try reload this. Okay, yeah, just to make sure. Sometimes, dude, extra chart, sometimes VWAP is like at the moon and it's fully bugged. But yeah, it doesn't look like it's happening here. Do you have a level we have some little sellers on? I mean, we do have sellers here. Like I said, right? This is the yesterday's value area low. So you're going to get a battle of orders here. When I say battle of orders, all I mean is aggressive buyers and aggressive sellers competing to take back control. Like, you can look at these bubbles over here. This is the price range we're currently playing in at this level over here. Of course, the discrepancies is because this is the range and this is the time frame.
McKellitzum says, Sanch, has anyone ever told you that you got a reporter's voice? Honestly, no. I don't know if that's a good or a bad thing, but I have no idea.
No, he's got a podcaster voice. You know, he should definitely
maybe
try a podcast.
Yeah.
Maybe call it prop firm trader or something.
Yeah.
I don't know.
I think you're onto something here, man. Might have to look into this.
But yeah, Sanjay's a really good host. I've watched a few of those podcasts.
I appreciate it. I always just say I was blessed with this infinite ability to talk shit to anyone. So podcast host probably makes a good fitting job. But you know what? It's a cool gig to have, man. You meet some very, very interesting characters. You get to hear a lot of interesting like backstories.
Yeah.
And it's almost like this is going to be a massive stretch, I feel like, for a lot of people. It's almost like Market Wizards, but in real life. Because you get to see so many people that have found their edge doing a variety of different things, but they all make money in their own way, which is it's an interesting place to be, man. So we got your break above. Are you waiting for retest now?
Retest, yeah.
I'm starting to learn your playbook now, man.
I mean, it's like, it depends on the market regime as well. Sometimes I don't wait for a break and retest. And that just goes back to the volume profile. If we're in a balanced market regime, like what we have here, I want to be a lot more selective with my trades. I want the market to really scream out to me. If you're in like these market conditions where value area is consistently building higher, then, you know, a lot of times waiting for that break and retest, you're going to miss the move. And there's no need anyway, because you're in an imbalanced state of delivery on the higher time frame.
Makes sense.
See, now I'm not even interested in this anymore because I have a clear criteria. Volume point of control, right? Low probability condition, low probability level. There's a good chance, I could almost bet on it, that we're going to consolidate here. But that's not financial advice, so don't take my word for it. But I think like my hit rate with anticipating consolidation is almost 100%.
Damn. It's a bold statement, Hugh.
Almost 100%. Let's just see if we get this consolidation. Might just have to extend the stream so to show you guys we get this consolidation at this level. Oh shit. Oh,
The
never
market
mind.
makers are after you, Hugh. They know what's going on. They're out to sabotage your win rate.
No, don't worry, guys. Look, I'll draw out the candlesticks right here. This is how it's going to move exactly. Watch it follow that pattern. Bearing in mind, it's also overlapping with 29,600.
Nice. Round numbers. So Hugh is not going to double down. Damn, he must be disciplined.
Wait, double down in terms of what? Like in terms of this trade or my statement?
I don't know, maybe both.
Buyers do look a lot more aggressive at the moment. Let's see. There is also potential, guys, that we can come back into 9:30. 9:30 open. If you're still trading this market later on.
So far, we're mapping your drawing pretty well.
Oh, there's Lethan. Almost to the T. Hopefully we don't get that expansion.
Yeah.
Yeah, but even if it does expand, like there's nothing, there's no trade for me there. I don't use volume point of control as entry levels. I mainly use them as take profits and targets. The only levels I use is value area high, value area low, and ranges with passive protection.
I think we're coming up to the end of our window.
Yeah. Well, it's been a good stream, guys.
It's been solid, man. Been solid.
Let me know if you guys have any last minute questions. If not, then I think we can start to wrap it up.
Yeah, if there's anything else, guys, throw it out in the chat. Myself and Hugh are happy to answer anything you guys may have.
Value area high is here. I use regular trading hours, value area high, by the way. If this candle closes bearish, then I think that's a good exit for the stream.
Yeah. Keep that 100% win rate.
Amazing. You guys get a break.
Yeah.
I stream every Wednesday, guys. So I get like a 1 week break.
Yeah. He's part-time around here, man. I don't know what's going on.
Yeah, it's been a good stream. Lovely, McElliotson. You're like in every stream. I see McElliotson in every stream.
He's more consistent than we are, man.
He's got a stream schedule for himself.
Yeah. Watch Alert says, is there a schedule for the speakers? If you check Instagram, there's usually a nice little schedule that's pumped out at the start of the week to tell you who's on, who's streaming, timings, and things like this. But yeah, check out Chart Fanatics on Instagram.
Thank you both for everything. Have a good rest of your day, my friend. And Sanj, let's keep that head shining, my bold brother.
I actually need a cleanup. I need a cleanup, man. I'll come on a little bit fresher tomorrow, Eric.
We can't do a stream without someone speaking about your head.
It's true. It's true. Usually I'm the first person to put it out there just to get the conversation started.
Are you eating mostly protein for your next meal? I'm drinking a protein shake right now.
Nice.
Yeah. But yeah, I think we should start wrapping it up. No, my hair is full. I just have a cap because I bleached my hair and it's like low-key orange. So I need to do another session. I don't want orange hair. I want like white hair.
Oh, you and your first world complaints. I would just love hair, man. Oh, man.
Okay. Right, everyone. I think gonna wrap it up here. Take care. Any final words, Sanj?
Nah, just stay safe for FOMC layer if there's any volatility, but just keep your eyes peeled just in case, and we'll see where we go, man. But I will probably be back for the stream tomorrow as well. So I will see some of you guys there. I'll be on with, I believe, Pav tomorrow. So yeah, have a good rest of the evening, guys, and we will see you in the next one.
Cool. Take care, everyone.